Good morning, everybody. Ron with the stand-up triple. I like it. How you guys doing today? Got my fingers crossed that people have access to the room here. Pete made me a little nervous, so we'll see if people funnel in. Somebody's got to do it, right? Good stuff. I am in full-blown learning mode right now, so I'm pretty excited. Man, Ron, he is as set as he is going to be. They have taken nearly everything that they were able and put it up on counters, put it up on the pool table. I think the reality is that if they actually get that 15-foot surge that they're predicting, 13-foot surge that they're predicting, their house is going to be gone. It won't matter how high they stack it. So we are hopeful. We're praying for it to miss, but we'll see what happens. Mother Nature. Don't mess with her. So we're hopeful. He's packing and moving stuff this morning. It's expected to hit tonight. Man, only 12 people. Maybe everybody's hurricane prepping today. I'm not sure. I know we do have a lot of people. Hey, what's going on, Wayne? Erla, nice to see you. Hamid, great to see you. Good morning, Miss Adriana. You guys doing all right down there in Miami? Gearing up for the storm? Hopefully it's not too bad for you guys. Yeah, Ron. He's got it strapped down. So as long as it doesn't go over the rails, he'll be good. Good morning, Jay. Sunny like Miami. Gotta love that. Gotta love that. Guys, let's do our daily news. Hey, what's going on, JK? Good to see you in here. You'll be trading the golf ball cart for an airboat. You keep threatening. I don't think you really will. Guys, today is Wednesday, October 9th, and when we talk about news, 9:15, FOMC member Logan's going to speak, but it's low impact. We're not worried about that too terribly much. At 10:30 a.m., all my crude oil traders, we've got crude oil inventories, which means that they're going to release a number of barrels. And guys, honestly, that doesn't affect us because everything that we do revolves around patterns, right? But there are people that trade the news. There are people that wait for that release, and then they make big decisions, and it can spike the market, and it makes it difficult for us to trade our patterns. So understanding when the news is helps a lot. Yeah, JK, you are not going to Palm Beach on Friday. I hope there is a Palm Beach on Friday. Guess you'll just have to change your flight, go hit the California beach or something. And then today at 2 p.m., guys, we've got FOMC meeting minutes. And if you've ever been around at 2 p.m. for FOM meeting minutes, guys, it is an absolute cluster foxtrot Charlie of a moment. Markets spike and jump and bump and just go absolutely crazy. And I wasn't going to go golfing today, but now that I see it's FOMC, I won't spend the afternoon looking at my charts. I'm going to go hit some golf balls and get frustrated that way. But every morning I come through and I check news, guys, and it's important to me to understand when the high impact and the medium impact news releases are because they really can affect your position and they can make that market spike and jump and do weird things. I'm going to come over to the Nexgen page. I'm sure all of you are familiar with it. And specifically, I'm going to go to the trading guide, and this is where all the answers come from. Pretty much every time, everything I talk about comes from here. So Wayne, what's my favorite time of day to trade and why? For me, the times that I trade are really more of a matter of convenience. I will watch the market from about 6 a.m. Central until this classroom starts at 8 a.m. Central. And if something sets up, fantastic. If it doesn't, no worries. And then when class is over, I'll usually go grab something to eat. And then I'll watch it from noon to 2 or 3. Just depends. I just kind of watch it when I can. And I firmly believe that if you have rules, good morning, Jen. If you have rules, if you know your setup, it's either going to happen or it's not. So I try not to sit in front of the computer for 6 hours straight. When class is done here, I stand up, I go to the gym. I get the hell away from the computer for 30 or 40 minutes, and then I'll come back and I'll watch it on and off in the afternoon. Who knows? Maybe I'll sweep a floor, come look at my charts. I'll make some lunch, come look at my charts. I try not to be chained to my computer. I know exactly what I'm looking for. So I don't have to fabricate anything. I don't have to focus intently for hours on end. I just, when the market's up, my charts are open, and I may miss one, I may catch one, but I don't put too much. I don't have a favorite time. Anytime I'm available to be in front of it. So that's my whys. I think what you'll find is that once you have a solid plan and you learn how to follow it, most of you won't trade past noon Eastern because you're done. And that's typical for most days. I think Pete yesterday was up almost 2,800 by 7:45 in the morning. And yeah, oil is great from 3 a.m. until about 11 a.m. and then the volume goes away completely in oil. I don't even open oil charts after class. So, guys, I hope that was helpful. This is where we talk about stuff. This is where all the stuff comes from. And I'm going to go to the frequently asked questions, common terms. They change this up on me. And I do this every day. And I think that I do this every day because I want you guys to believe it. I want you guys to believe me when I tell you that we're building a foundation right now. And the goal is to focus on one thing and do one thing well. To understand one thing completely, because this one thing that we talk about is what builds the foundation for you. This is the one that's going to set you up to see all the other things that are available in the market. And what it is, it's that high probability trade, guys. This high probability trend trade that I talk about every day, incessantly. And this is the trade where each indicator on every chart agrees for the rules for the trade. This is the best of the best, guys. This is when all the triggers are the strongest, when there's no termination conditions. There's no trouble spots between your entry and your target. This is the trade that typically wins 70 to 80% of the time when you follow directions. This is the trade, again, my favorite phrase, it builds confidence through the memory of success. It's difficult to win that much and not feel good and have faith in it and what you're doing. But the most important thing that this trade does for you, and why I'm so focused on it with new users, is that this is the trade that teaches you to read your charts. This is the trade that teaches you to understand what your indicators are telling you. This is the trade that makes it so that you can open up a workspace and go, oh my gosh, my advantages are present, let me find a trade. And 90% of your time is going to be doing without those advantages. 90% of the time, guys, you're sitting on your hands doing nothing. And Wayne, that kind of goes back to why I don't know that I have a favorite time to trade, but I know exactly what it is that I'm looking for. And some days it might take 10 minutes before I get into the market, and some days it might take 4 hours before I get in the market. And that's kind of what this trade does, is it gets you to where you can speak to yourself in terms of advantages. And that 90% is going to keep you on the sidelines doing nothing. That 10%, though, when you're committed to those advantages, guys, it can be very profitable. And once you kind of get comfortable with being able to read your indicators, you're going to understand things like where the market is likely to continue. Initially, that's going to be your entry for the highest probability trend trade. You're literally going to be able to pinpoint where the market is likely to continue with the trend. You're going to understand where the market is likely to go. You're going to use those key Fibonacci areas. They make great targets. And then you'll understand where the market is likely to stop. And this is just a giant red flag that's either telling you, hey, don't take that next trade, or sometimes your likely to stop area is the same place as the likely to go. And you'll be able to take profits rather than hoping that areas break, hoping that fibs break, and really focusing on getting paid. Because really that is the goal. That's the goal of trading, guys, is to make money. And I think we forget that sometimes. This is a business. And initially, we're going to talk about this highest probability trend trade, guys, because it's simple. The concepts aren't difficult. The looks are easy to learn. But it's the repetition that really cements them and makes it easy to read quickly. So when we talk about these three rules, each rule provides an advantage. We're looking for strong triggers because they provide the advantage of momentum. That's the first part of the puzzle. Then we're going to make sure that there's nothing in the way, no termination conditions. That's going to give us what we call a clear path. And once I have momentum, once I have a clear path, guys, I have everything I need to build a trading plan. I have everything I need to be profitable. I have everything that I need to be consistent. So the first two rules I really want you to latch onto. The first two rules I want you to make sure that you have a solid understanding of. And if you don't, I want you to have the courage to raise your hand in this room and say, Mark, let's talk about termination conditions. Mark, let's make sure that I understand momentum. Because this is the bread and butter. This is the one that opens every door for you. Rule number 3 is specific to the high probability trend trade. And this is the one that defines your entry area, that shows you where the market is most likely to continue. So you've really only got 3 things to learn. And you only have to learn them on 2 charts. We use a big chart and a little chart, large chart, small chart, grande, pequeño, whatever works for you guys, but your large chart leads the way. Your large chart on the most current bar, this one bar, it's a very slow moving chart. It's a broad stroke of a brush. It will define the direction of the market. If the background on this chart is green, guys, it's going up. We're looking for rules to be met for high probability trend trades long. If the background is red, it's going down. We're looking for rules to be met for high probability trend trade short. It will define the momentum through rule number 1, and it will define the areas that are important to us through rule number 2. 66% of your advantages come from the large chart, guys. You could take your first week with Nexgen and study nothing but the large chart, because once you have this down and once these advantages are in place, you're going to go to the smaller chart. It's a refinement chart, guys. It takes that broad stroke of a brush. It takes that one bar, breaks it down into 20 to 30 bars. It allows you to not only see where the market is most likely to continue, this becomes your entry, but that refinement process is going to reduce risk dramatically. It's going to actually increase your profit potential. And we use these 2 charts because they remind us who we're trading with or who we're trading against. That larger, slower chart is that overall look, and this is the large crowd. These are the people that want the market to go up. These are the people that want it to have momentum. These are the people that react at those key areas. And the path of least resistance for most of us, I think all of us, is trade with the large chart. Trade with the large crowd, guys. Go with the flow. And then the small charts, like this small crowd. And man, they've got way more money than I'll ever have. They had a rich uncle or something. But the small crowd has the means to create these ripples, these little pushbacks that go against everything the large crowd wants. And they take quick profits and they're having fun with it. But they fail 70 to 80% of the time. You will be able to pinpoint exactly where they're most likely to fail. And this will become your entry for the highest probability trend trade. So we're actually going to capitalize on trading with the large crowd, but we're going to hope the small crowd shows up to fight, because we're going to hop into the market right at their failure spot. There is a path to getting to where you want to be sooner than later. There is a path to being a chart reader quicker. And first you've got to learn the rules. I love language. I really do. And I believe that language is impactful. And I had someone tell me yesterday that there's anchor words. You'll hear words that you associate with things. And guys, learning the trigger line and the Fibonacci rules for when it's okay to trade, I want you to learn the words. I want you to use words like strong, room to profits, clear path, because they're going to become very impactful for you. Learn the rules and simulate. Practice. Guys, you've got to go in and make mistakes. You've got to be willing to sit through and let targets get hit or stops get hit, because what you're doing is you're just learning. You're feeling things out, guys. You're walking in a dark room, bumping into furniture. Eventually, you're not going to do it. But post your pictures in the room. This is the first step to getting to where you want to be ASAP. Show me what you're doing. Tell me what you see on that chart and tell me why you did what you did. And every time you post in my room, guys, it is a one-on-one session. I'm going to give you feedback on what I see. I'm going to talk about what you see. If there's a way to see it better, to do it better, to have less risk, more profit, guys, we're going to address it and we're going to work through it together. And keep it simple. Keep it focused. Get good at this high probability trend trade before you try to add more trades, even before you try to add more markets. Because what happens is I want you focused on the best of the best. I want you understanding the best of the best. Because once you do that, once you can find this high probability trend trade and it becomes effortless, that's when you open the door for the next trade. Because if you try to learn too much, if you try to get it all in the beginning, you'll confuse things. And it's funny, I'm like the only one that says, hey, don't get too smart too quick. Focus on the basics, right? So I'm going to give you plans for a high probability trend trade that covers everything from entry to management. That's going to open the door for the second trade that I give you, which is what we call a medium probability trend trade. That's when almost everything is perfect, but not quite. Your ability to read charts will identify problems. Your ability to read charts will allow you to manage aggressively. You'll know when to take those profits. You'll know when to get to a zero loss level. And that all stems from what you learn from the high probability trend trade. But here's the big one. What looks will you commit to, guys? You have to learn these looks so that they become easy. And that's kind of my segue into the second half of what's going to get you where you want to be ASAP, guys. Use the spreadsheet that I'm about to give you that Nexgen gives you when you download the software. Even the CME says, man, guys, make sure that you have a trade journal. Make sure that you're keeping track of your progress. Make sure that you're recognizing these patterns. And that's what the first tab on this sheet is, guys. It's nothing more than a trade journal. Every time you take a trade, you're going to take a picture. You're going to write all over that chart. And I'm going to show you something real quick. Guys, I don't just tell you to do this to keep you busy. My first... Oh my gosh. I'm trying to figure out where my day started. Boom, 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 boom. That was the first picture in the series of a trade. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. I took 10 pictures during the course of a trade, guys. You don't have to post all 10 pictures in the room. Show me the one that has the beginning, where you enter. Show me your exit, and then we'll talk about it. And Spice says, learning how to lose is part of trade management. Lose small and grow with each loss. Absolutely, guys. Losing is a normal part of a positive equity curve. Losing is not a failure. It's an opportunity. And what we'll do is we'll focus heavily on making sure that if you are taking losses, you're taking the correct losses. You're taking the losses that came from a pattern that wins more than it loses. And that's one of the advantages that Nexgen gives you, is the pattern that I'm teaching you right now has been proven. It's been back tested. Guys, we've got 28 years of teaching people to day trade. This is the golden goose. And if you can follow it, it works out. But most of us turn it into fried chicken in the beginning. That's why you have to post in the room, guys. Get that feedback. And there's links on the spreadsheet, how to paste links in here so that you can see your pictures. And even more importantly, how to annotate your charts so that you can get good fast. And what you'll find is that the best annotated charts talk about the three advantages. The advantage of momentum, what it looks like, why it looks like it, and if that rule is met. The advantage of a clear path, what it looks like, what creates it, what rule it pertains to. And what you're doing is you're creating this awareness with a look and the words that describe it, the advantages that describe it, the rule that describes it. And then showing me not only your entry, but also your exit. And guys, what happens is when you show me this, we can talk about less risk, we can talk about more profits, we could talk about bigger holds, we could talk about exits that should have been taken. And every time you post in the room, guys, I need like 4 charts from you, 4 to 6 charts from you. I'm gonna recognize your tendencies. I'm going to recognize your habits. I'm going to recognize what it is that you tend to do that's great, and I'm going to recognize what it is that you do that maybe is costing you a little bit. But you've got to go back and recognize these things too. And that's where, there it is, you've got to go back and study the trades that you put into this spreadsheet. And this is so often omitted by students. If you take 5 minutes every morning, cup of coffee, right? You don't want to trade in the first 5 minutes anyway. You're still wiping sleep from your eye. Go back and look at what you did yesterday and ask yourself very key questions. Hey, what worked? Did momentum and a clear path carry me to my profit targets? Oh my gosh, it did. I'm going to focus on that. I'm going to repeat that. And then you have to ask yourself what didn't work. For most of you, it'll be trading into those darn lines on your big chart. And what you'll do is when you start this little study process every morning, you're going to be focused going into the day on the things that are bringing you success, the things that are taking that success away. And it will accelerate the learning, guys, dramatically. The second tab, I've started building it, and I'm going to give you a sheet that helps you fill this out. But strong triggers is rule number 1. I've already put 51 pictures of strong triggers in here so that you can study them, so you can learn that individual rule. I did the same thing with a clear path and an entry area. And then I really do feel it's important. Understanding advantages is great, but what does it look like when the advantage is gone, right? If I have a green light, I know it means go, but if I don't learn that a red light means stop, I'm going to hurt myself. So I've got pictures of weak triggers and of termination conditions, guys, and I'm learning both sides of the coin. The third section is where you're just going to plaster all your pictures. The ones that fit the rules go in the green section. As you begin working on management plans, that's going to go in the orange section. When you begin to recognize patterns because you're getting good at your chart reading, start taking those pictures, put them in here. And then I encourage everybody, take a lot of pictures of termination conditions. It is the most broken rule with all of us. It was for me, for sure. And then the final one is the client trades, guys. And this is, I mean, everything. This is the high probability trend trade entry sequence for both longs and shorts. I've got almost 400 pictures of you guys being brilliant with the software. You adrenaline junkies that want to trade the NASDAQ. I've got one picture, and I think this is the most important picture to help you find success. There's management, very mechanical, and then how to hold bigger, where not to put stops, patterns, termination conditions, guys. So make sure that you're filling out that spreadsheet. Make sure that you're going back and looking at it. But most importantly, guys, make sure you're posting in the room and asking for help. I can't see your lovely faces, so if you're sitting there confused, I need you to talk to me. I need you to say, hey, Mark, dude, seriously, we got to talk about strong trigger lines because I can't seem to see them. And then I say, well, you just hold tight because here we go, guys. Large chart leads the way, and it needs strong trigger lines. Are there any questions, though? Before I get going, is there anybody having a challenge, anything that you want me to jot a note down and make sure I cover twice today? We're good? All right. Let's talk rules. Rule number 1, the large chart needs strong trigger lines. Why? Because strong trigger lines are going to give me the advantage of momentum, guys. Momentum is the first piece of the puzzle. It's a very important piece of the puzzle, and it's pretty easy to recognize. So when my background is green, the trend is up. I'm looking for rules to be met for high probability trend trades long. The only way that I can have strong triggers, the only way that rule number 1 can ever be met is if my small triggers are green, my large triggers are green, and my background is green. The colors are going to match. And then my small triggers, these solid lines, will break up and above the large triggers. And the large triggers should be widening. They should be angled in the direction of the trend. And when I have space between the two, picture scissors that are open. I love that analogy. When the scissors open, the strength is present. This is what defines strong triggers, is the separation between the small and the large. And when I have strong triggers, the odds are favorable for the market to continue up. So we can make money up or down. God bless the futures market. So in a downtrend, when my background is red, my small triggers and my large triggers must be red. The scissors have to open. That space between the small and large lets me know that the odds are favorable for the market to continue down. Odds favorable momentum, OFM. You're going to see it on charts all day long, guys. This is the one that pushes the market in the direction of the trend. This is the one that can break key Fibonacci areas. This is the look that's going to cover the mistakes that a lot of us make as new users. And when I'm strong up or strong down, guys, on this big chart, I might see these tails. Remember I said that we're going to use a refinement chart. You'll be able to pinpoint where these tails are most likely to form. That's going to be your entry for the highest probability trend trade that you can take. We don't trade these tails on a slow chart, guys. You're going to pinpoint. But we're going to use these tails to go back and study to build a little confidence in this look. So strength, separation, scissors open, guys, odds favorable. Learn those words, commit to it. And then when the scissors close, when the small triggers return to the large triggers, when they work their way inside, guys, this is what we call a weakening of the large triggers. It is a visual representation of a trend that is slowing down. And when I have weak triggers, anything can happen up or down. Again, going back to that language, strength, odds favorable, weak, anything can happen, guys. And we're going to look for this on the most current bar. So if I open up the crude oil chart right here, guys, the trend is up because the background is green. The momentum is strong because there is separation between the small and large. Can you give me a Y in the room if you see it? Let's just make this big. The most current bar says that we have a market which has the potential to continue in the direction of the trend. The odds are favorable, but that's just the first part of it, right? Odds favorable, momentum down, and the market continues down. Odds favorable down, it continues down. Odds favorable up. Notice that weak triggers, and there's a reversal. The triggers weaken. There's a larger retracement. The triggers weaken. There's a larger retracement once again, guys. So the easiest way to get to where you want to be isn't necessarily taking trades, but rather taking pictures so that you understand. Is everybody okay with this? This is rule number one. I don't want you to be shy about giving me a Y in the room, guys. And I do this, so when I ask, is everybody cool with this? Are we good with this? Are you good with this concept? It's not because I need feedback, because I have low self-esteem, guys. It's because every now and then, somebody's going to give me that magical letter. They're going to drop an N in the room, and they're going to say, hey, Mark, let's talk about it just a little more in depth, because it's important to me that I understand these advantages. And guys, it is important to me that you understand these advantages. So, strong triggers lead the way. Strong triggers happen on the first bar of the large chart. Once I have all of that momentum, I have to make sure that I have a clear path. I have to make sure that I'm not trading into one of those key areas that has the potential to stop the market. And guys, termination conditions are Fibonacci-based indicators that have the potential to reverse the market. And these are the areas on the large chart where the large crowd makes decisions. These are the horizontal lines on your big chart where the buyers buy, where the sellers sell, where fights happen. Guys, these are the places where you don't want to get caught in the middle of their fights. The areas that can be considered termination conditions are magenta high divergence highs. This means that there was a loss of momentum at this pivot. Price went up, but momentum didn't follow. You'll see this magenta line print, and it becomes like a line in the sand. You'll see the same thing from a low, cyan line, light blue. If the market goes down and up, and momentum just didn't follow price, you're going to see this blue line. This blue line can terminate the trend. It can actually stop the market cold. We're going to use Fibonacci resistance, and when the market is trending up, this is a point where the market may stop, it may bounce, it may reverse completely. Fibonacci support gets it going the other direction, and then these yellow one-to-ones. You don't have to know how any of these lines come to be. You don't have to know why they exist on your large chart, but if you tell yourself, this is where decisions are made, I need to go through a simple process to make sure I don't trade into an area likely to stop the market. And the process is simple, and it all begins with price reaches the area. The large crowd pushes the market directly to Fibonacci resistance. The only thing you have to do is ask yourself, where are my triggers? If your triggers remain below resistance, Guys, this is a termination condition. It may reverse the market. There may be an untradeable bounce. There might be a fight that goes on for hours. You don't know. You'll never know. But if you go through this simple process, did price reach an area? Where are my triggers? Okay, they're below. Rule 2 is not met. No trades into the area. Maybe it reverses the market. Guys, if you get one of these terminations where the triggers remain below and your large triggers pinch and roll, we're going to call this a strong top. And a strong top is the precursor to the highest probability trend trade short you could ever take. And the market continues down, and once again, price reaches support. Decisions are being made, and you don't know what they're going to be. Where are my triggers? My triggers are above support. Support is a termination condition. Yellow 1-to-1s are a termination condition. Divergence lows are a termination condition. Absolutely no trades into the area. And guys, this is the most basic form of understanding termination conditions. And how's that? Price reaches resistance, all the triggers remain below, and look at the reaction coming off of it. Now I've got momentum going the other direction. One of the best things you can do is learn to respect the idea that these lines can create bounces that can pull you right out of the market. These lines are going to help you recognize tops. They're going to give you points for bounces. Do you guys see how often these lines create a reaction? It's pretty outstanding. So rule number 2 is going to show you where those reactions are most likely to happen. But areas break. Guys, areas break all the time. And I'm going to tell you though, price reaches a line, that line's a termination condition 99 out of 100 times, at least for the moment. And it's not considered broken. This Fibonacci support isn't considered in the rearview mirror until both the small and the large triggers get below support, or until both the small and the large triggers get above resistance, guys. And at that point, support behaves as resistance. You can see how the market pulls right back to it, and resistance behaves as support. And guys, once the trigger's clear, that path is clear. We're looking to get our rules met to take trades until we reach the next area. And then the process starts all over. One of the things that you'll notice is very often these areas break because of the odds favorable momentum, because of that big push. And that strong trigger look is enough to break areas. And when I get weaker triggers at these areas, they're more likely to create a bounce. Strength pushes through, and then it weakens right at a key area. And guys, now we're putting together the idea of momentum and lines, terminations, to help us say to ourselves, man, there's just no reason to take that next trade. Even with momentum, my triggers remained above. There's no reason to take that trade. Let's wait until the small and the large clear, and I get that clear path. And guys, look at this one right here. Smalls and large get below, and the market pulls right back to what used to be support. It behaves as resistance. And chances are, if any of you were up at 9:13 in the morning, I may see a short trade where you got paid, and that's kind of what I'm rooting for. So, price reaches, triggers above, sit on your hands. And guys, now we're in a transition phase. Now we have a look that's going to be your second trade. And this is not a high probability look. This is what we call a medium probability look. When your small triggers absolutely smash through Fibonacci support, when you have odds favorable momentum, but the large triggers haven't cleared yet. 50% of your triggers are through, 50% are not. Very, very cleverly, we call this a 50-50 look. And what this look tells me with all of that momentum is that this area has the potential to break. But because the large triggers aren't through yet, it's only potential. Rule number 2 isn't met. Smalls absolutely smash through the area. Large triggers are lagging behind a little bit. Because of the odds favorable momentum, this fib has the potential to break. Guys, potential to break is not rule number 2 met. Potential to break is a small issue because you don't have a clear path. This will be your medium probability trade. Most of your trades are going to have this look, and we have one currently right now. in crude oil. The small triggers have absolutely smashed through. The large triggers haven't yet made it. And you can see how the market is reacting and dancing right at this key area. Buyers and sellers are trying to figure out who's going to take the cake here, who's going to win. And the reality is we're not sure, but I'm going to give you a plan to be able to capitalize on that look. But first, you got to keep it simple. If price reaches an area, the triggers remain below that Fibonacci resistance, sit on your hands and wait for a second. One of the great things about what we do is we don't have to predict anything. We simply react to having advantages. If the small and the large get through, the path is clear. Let's look for our trades. There's one of those tails with odds favorable, potential to break. That might have been a great opportunity. And then once you're good at these two basic concepts, it opens the door for your second trade. The potential to break. Remember, small triggers must smash through an area. I don't want a little prairie dog gopher sticking its head out. Let them get through 3 to 4 points. Large triggers are lagging, and this look insists that you have odds favorable momentum. So guys, these are your options. In the beginning, it's either a termination or it's clear. That's going to carry you to the potential to break. Is everybody okay? Are you guys keeping up with me so far? Do I have any newer people in here? I know, JK, you're still relatively new. Is there anyone else? Sometimes I get names, sometimes I don't. Sometimes you guys sneak in under the radar. If there's anything that you need, if you're brand new, let me just remind you, you can't interrupt me. You can't ask questions too many times, guys. It can't be done. Drop your questions in. Raise your hand. Tell me you need some help. One of the sad realities of trading, I don't even know that it's sad. There's going to be times when your path isn't clear because the areas are stacked, guys, because you've got a bunch of fibs. You've got divergence lows. There's 1-to-1s. And what happens is you reach it and you say, crap, I got to pump the brakes. No trades for me. My rules aren't met. And you're like, all right, we got the potential. Son of a gun. There's another fib. Oh, we're almost through it. Jeez Louise. I hit another area. And guys, this is 90% of your day. 90% of your day is just accepting the fact that it's okay to do nothing, because the futures markets trade billions of dollars every day. Billions with a buh. And guys, you don't have to be in every move. Be in the best moves. Be in the highest probability moves. There is more money than you could ever spend being traded in this market daily. All you have to do is capture your share. And then my final picture here, and this is what amazes me, is Fibonacci gives you the ability to see where the driving forces of the market are likely to make decisions, guys. And rule number 2 will help keep you out of consolidation. It'll help keep you out of chop. It'll force you to be patient, but it'll keep you from arbitrarily giving your money away into areas that you shouldn't be trading into. And one of the most true statements that I'm ever going to make is that the difference between the successful traders and the people that struggle, the difference between the people that are doing what you want to do and what you're currently doing, is typically the ability to do absolutely nothing when the rules aren't met. And that, in my opinion, is the most difficult thing about trading. Sitting still, especially if you're me. I like to keep moving. I like to add second jobs to my life so I don't have to sit at home and do nothing. And learn how to do nothing. Learn how to relax, guys. Insist on having momentum. Large chart, strong triggers. Just commit to it in the beginning. Say, there is no way I'm taking a trade without rule number 1 met. And then once you have it, insist on the clear path. Go, my money is worth having room to my profit targets. I don't want to trade into something that could create a bounce or a fight. And once you have these, that's when we're going to go look for an entry, guys. We're going to turn to that smaller, faster chart, that refinement chart. We're going to break that big old bar into 20 to 30 bars and pinpoint where the market is most likely to continue. But if I go to look for an entry and I see this, 3 divergences in the same price range, 3 cyan lines from a low coming off of those pivots letting me know that there was a loss of momentum, or 3 magenta lines coming off of those pivots letting me know that there's a loss of momentum, guys. This is your small chart showing you the change that you can't see on that big slow chart. 3 divergences in the same price range may terminate the trend, guys. And it becomes very powerful when you have those weak anything can happen triggers. That same lesson from rule number 1. And it becomes even more powerful if the third divergence is higher than the second from a low or lower than the second from a high. Creates a little head and shoulders pattern here. And what this tells you is that, man, not only can price not even get as low as it did last time, but we're losing momentum again. And you're going to see this look at a low or this look at a high, times when maybe the large chart seems to be turning from the middle of nowhere. And let's see if we can find an example. Oh, look at that. It broke. There's one of those tails. Holy smokes. Let's look at 9:14 a.m. where the market started to weaken on the large chart. Let me find my other chart. 1, 2, 3 divergences, and then there was a push up. Kind of cool, right? 1, 2, 3 divergences doesn't always work. We've got 2 divergences now, right at Fibonacci support. Maybe we'll see a third. Maybe these weak triggers right at a line are enough to push us. We don't know. We're going to find out though. Let's make some magic happen, guys. And I'm going to ask again for the wise. Just help me out. Is everybody good with momentum? You feel pretty good about that separation between the small and the large, providing the advantage of momentum? What about horizontal lines on a large chart may stop the market, or where these reactions can happen, where fights can happen? Horizontal lines, termination conditions, take away your clear path. Guys, once you have these advantages, we're going to go pinpoint where the market is most likely to continue. And we're going to do it with such accuracy that you're going to use a limit order. You're going to be able to wait for the market to come to you right at an area. Fibs, midbands, and yellow 1-to-1s. The same way areas on the large chart can create a bounce that goes against everything that was happening, areas on the small chart can create a bounce to get you in to that trend. And that's where the small crowd typically fails. But those areas need to be inside of triggers. So in one big breath, I'm going to say that I'm going to use a limit order to buy or sell a pullback at an area inside of triggers. And for you new users, this is the best of the best, favorable large triggers. This is the sexiest look on a small chart you could ever have. Because one of the things that is a gospel truth each and every day is that price returns to large triggers. Whether it is a large chart, a small chart, a range chart, a month chart, it doesn't matter. Price comes back to those large triggers. So what we've done, my brother, turns out he's pretty smart, is you have the large triggers from the small chart. They're smooth. We're going to use these, right? Looking at momentum. There's separation between the small and the large. But he also put the large triggers from the large chart onto your small chart, onto your entry chart, your refinement chart. And they're dashed, and we call these synthetic triggers. And what happens is these triggers define where the price bars are most likely to return. So when you're looking at your small chart, look at those large triggers, and I want you to start saying to yourself, small chart price may retrace back to the large triggers. And I have areas inside, 1-to-1s, I have Fibonacci. These could create a bounce. And then the synthetic triggers, large chart may retrace back to these. And I have a mid-band in there, and that may create a bounce. But if you accept the idea right now that price returns to large triggers, then what you can do is you can create this zone. And then you can refine that zone dramatically by having areas inside. And this red box is what we call a window of opportunity. The woo for you Ric Flair fans. And this is the most likely point for the small crowd to fail. This is the most likely point for a bounce and continuation with the overall trend. So there's a process to defining it, guys, and I try to break this down into steps. When the large chart, let's take a picture and let's vandalize a little bit. And I see somebody sent me a message in Discord, guys. I'll look on the break. Remember that the large chart must have odds favorable. The large chart must have a clear path. We're demanding that, right? We're making sure that we have these advantages because this is our investment. This is our business. We want to make sure that we have that. Guys, you're going to see all of this. This is where the fear of missing out kicks in. This is where you guys start feeling like the market's going without you. And what's funny, and I've seen it a million times, and you're probably going to giggle because it's you. You're like, oh no, egads, it's going without me. Son of a bitch, what's going to happen? I'm not getting paid. And then right about here, your guts have taken all that they can handle, and you just jump into the market hoping to get paid, right? Anybody other than me ever done that? And then you get this reversal bar. And this reversal bar signals the beginning of the fight. This reversal bar is where the small crowd says, it's cool, Wayne. We're coming back for you. Don't let that fear of missing out kick in. And guys, the reversal bar is not the entry. The reversal bar tells you, hey, let's look for those trigger lines. That's your red box from the highest line to the lowest line. And this is where price is most likely to return. So I'm going to do this. I'm going to draw a pink arrow. And this pink arrow represents where price is most likely to return. But I don't expect trigger lines to create a bounce. I'm looking for the highest point of support to the lowest point of support inside of favorable large triggers. Notice that big all caps, inside of favorable large triggers. And what I know is that price may hit this mid-band and ricochet to the upside, or price may come all the way down to these one-to-ones and ricochet to the upside. And this is why we create a window. I don't know if it's going to be the high point or the low point, guys. I don't even know if it's going to work, but I do know that this is a pattern that works more often than it doesn't. So what you're going to do, and guys, this takes a little bit of trust, which comes from study, is you're going to put a limit order a couple ticks above the highest point of support. Because remember, the large chart is screaming up with absolutely nothing in the way. We will not trip over a couple pennies trying to save dollars, guys. This is your entry for the highest probability trade at the highest point of support, tick or two above. And man, if the small crowd has it in them, you're in that trade. And if they push it all the way down to the lower level, you don't care. It's still in the window. But once price gets below these trigger lines, once price gets to the wrong side of triggers, guys, this is where the market shouldn't go. You're going to train yourself to ignore these fibs beyond the triggers. You're going to train yourself to ignore any area beyond the triggers. This isn't where we want to be. The advantage is gone. And then go in the other direction. The rules don't change. The process doesn't change. You got to throw up in your mouth a little bit as it goes down without you, but you're going to learn to believe that that reversal bar is most likely to happen. And when it does, you're going to look for favorable large triggers, and when you find them, you're going to look for the areas within. And guys, I have one area inside of favorable large triggers. I have a mid-band. And this mid-band is the most likely point for the small crowd to fail. This mid-band is the most likely point for a bounce to continue in the direction with the large chart. My limit order goes 2 ticks below it, and if they get me, great, and if they don't, it's not my trade. And anything on the wrong side of those triggers is where the market shouldn't go if this is going to be a win. And guys, that's your entry for the highest probability trend trade. I encourage new users, take 20 days, right? Don't put the pressure on yourself to be amazing on day one. I'm that kind of person. I put all the pressure on myself to be amazing on day one, and then I get frustrated when I'm not. Don't put yourself in there. Give yourself some grace. You're new. But once you can define where the market is most likely to continue, you can define where the market shouldn't go beyond those triggers. And your first stop placement is going to be 4 to 5 ticks beyond those triggers. And I'm telling you right now, great entries create manageable trades, guys. So your initial stop goes 4 to 5 ticks beyond the trigger lines. And here's the deal. Anything that wins 70 to 80% of the time is mathematically obligated to lose 20 to 30% of the time. Every 2 to 3 times out of 10 trades, guys, they're going to hit your stop. And you're going to want to be mad as hell about it. You're going to be pissed off. You're going to question the logic. Remember, If you have momentum, if you have a clear path, if you define your entry, this is a trade that has been proven through study and back testing to win more than it loses. So you've got to stop focusing on the one win or the one loss. It's a sample. Focus on the execution, guys, and accept the fact that you will lose trades, but you will lose smaller because you waited for the pullback. And then more often than not, you get this reversal bar in the direction of the trend. This is the one that says, hey, guess what, Mark? We're going up with momentum in that clear path. We're going down with momentum in that clear path. This will be your first stop movement. You can actually reduce your risk about 2 ticks above that reversal bar, 2 ticks below that reversal bar. And it's not uncommon to see people lose a trend trade, but because they had the reversal bar, they lost 30 or 40 bucks a contract. We don't have to have stops way out here in the middle of the void, hoping the market doesn't come down there, guys. We can manage trades aggressively, assertively, and we can have smaller losses because of the way we can pinpoint these areas and for having a solid management plan. And guys, that's your entry for the high probability trend trade. I talked about those tails, right, that let us know. Just for grins, I'm going to circle a tail here. And I want you guys to see something. Because all we're doing is trading patterns. Inside of this bar, the market went down, the market comes up, and I want you to see it right here. With that potential to break, it pulls right back to the mid-band inside of favorable large triggers. Your stop 4 or 5 ticks beyond the triggers keeps you in the trade. Are you guys seeing this? This is your pattern. This is your entry. This is your stop placement. And sure enough, it continues down. You did get 3 divergences. Some of you may have exited the trade. Some of you may have held because of the strength. But guys, this is what I want you to see. If I circle this tail, does everybody see? Can you give me a Y? It pulled right back to resistance inside of triggers. Your ability to understand where the market is most likely to continue gave you the ability to put a stop where it shouldn't go, and it did in fact keep you safe in this trade. And guys, this is what we're doing every day. Let's circle another right there. And what I'm doing right now, guys, is I'm showing you how to study. This one kept you safe too. Your lowest area of resistance was 1-to-1s inside of triggers. It made it 3 ticks above it. Your stop keeps you safe. You take a huge winner at 9 a.m. in the morning. And then you do have a little momentum, but no areas inside. And some of you might have skipped this, but once you're comfortable, guys, there's a way to take these trades. So this is how we're going to study. We're going to scroll back on a large chart, and we're going to look for times when we had odds favorable momentum, when there was the potential to break, and you guys are going to circle tails and see if they line up with areas inside of favorable large triggers. Can you give me a yes or a Y if you are just thankful as all get out that you didn't try to go long at this midband directly into resistance with all of the triggers below? Rule number 2 keeps you safe, guys, even with odds favorable momentum. So that's the perfect scenario. Odds favorable, clear path, area inside of favorable large triggers, guys. This is your foundation. This is your stepping stone. This is your first trade, not your only trade. But let's be realistic, right? This is the easiest look, but that's not always the look. And I want you to see how language pays dividends. I want you to see how a very basic understanding creates awareness. Sometimes the rules are going to be met, and your trigger lines will be split. They'll be divided. They'll be away from one another. If you paid attention during entries, you know that price may return to the large triggers and that price may return to the synthetic triggers. Can you guys give me a Y in the room if you understand that price returns to large triggers? What does this do? This creates a lot of indecision with this look, right? And then I've got 2 areas where it may bounce. It may bounce from a mid-band, but it may bounce from Fibonacci support in these triggers down here. And since I know that my stop goes below the lowest point of the triggers, does everybody see how that is a catastrophic amount of risk if this trade doesn't go from the mid band and I enter here? And my risk is defined before I ever enter the trade. I'm not cool with this much risk, but I don't know if it's going to get down to this area. What am I supposed to do? I can wait for one of those confirmation bars, guys. I can wait for a reversal bar. Instead of arbitrarily jumping in at the mid band, I can force the market to go in the direction of my trade. I can force it to go in the direction of the momentum. I can insist that it goes in the direction of the clear path. And what that does for you is it gives you a place to put your stop 2 ticks below that reversal bar. Doesn't guarantee that it won't come down to this one, but at least this way your risk is managed. It's lower. And you may have to take the trade twice, but if it goes from the mid band, you're in, you're getting paid, guys. And that stop doesn't have to be all the way down here, $200 deeper, but rather right behind there. So this is kind of a way when it's not perfect. And guys, it's going to be not perfect more often than it is perfect. You can use that same idea. And we saw that picture, it wasn't a picture, but we saw where on this one right here, you had momentum and you had a clear path and you had 2/3 of your advantages, but none of your areas were inside of triggers. And I don't know where the market's going to stop once I get to the wrong side of these triggers. But if I insisted on a reversal bar, I had a place to put my stop. I was able to capture that move. So another way you can do this is when it's not perfect, insist on confirmation, guys. When it's not perfect, insist on the market going in the direction of your trade. But here's the deal. When it's perfect, you got to sack up a little bit. You're getting in at the area inside of favorable large triggers. When the momentum is awesome, when the path is clear, guys, don't wait for confirmation. Get in at that area. Practice it on simulator. Learn to trust it. And there's your study right there, guys. When the rules are met, circle a tail. What's it look like on the small chart? If it's what it needs to be, this is your look. Commit it to memory. Take a picture. Identify the advantages. Drop it in the room. Let's talk about it. I'm more than happy to. Termination to termination. Weak triggers. Termination, guys. Remember when I said that rule number 2 would help you define consolidation? It appears to be doing it right now. Are there any questions about a high probability trend trade? Are there any questions? Maybe how to take a picture. My smalls are above the large. I don't have any areas inside of favorable large triggers. Oh no, there's my untitled workspace. I usually close that so you guys don't have to stare at it. So I can go in between 2 charts. There we go. Back to crude oil. All right, guys, that's my first hour. Every day I talk about 3 rules. Every day I keep it on 2 charts. Every day we identify advantages. And I really want you guys, I'm hopeful that you'll begin to speak to yourself out loud. When you look at a chart, you should say to yourself, I have momentum. When I say momentum in my room, guys, my dog wags her tail. And then say something like, I have a clear path, and she will stand up on her hind legs because she knows I'm about to take the best trade. And then I'll literally use the words, I need an area inside of favorable large triggers. And if I do that, Ellie says, take the trade, dummy. You've got the advantages. And I do. And guys, I'd take the exact same trades you do. I use the exact same method that you're using because I believe in it, because it works. I believe in it because I studied it. And one of the easiest ways to study it is this right here, guys. This is Chart Reading 101. And Chart Reading 101 is designed to get you where you want to be sooner than later, guys. Chart Reading 101 is the work that you have to do to become a chart reader. When I trade into areas, Gary, when I break rule number 2, she walks out of the room and she typically farts before she does. I got my trading dog trained. Guys, in order to get to where you want to be, you've got to recognize these looks quickly. You've got to recognize this pattern quickly. And this Chart Reading 101 is designed to reinforce these individual lessons so that you can piece them together to create a trade. The easiest way to get to where you want to be is not trading, but rather taking pictures. Taking pictures of advantages, annotating charts, committing it to memory. So I encourage you guys, I don't demand that you do, but take 25 pictures of strong triggers, weak triggers, clear path termination. Fill out this 101 section. Add to what I've already given you. And I'm telling you, if you do this, you're never going to take a trade convincing yourself that the triggers are strong when they're weak. You will not take a trade believing you had a clear path when it was actually a termination condition. And then once you get these entry looks defined, you're always going to know where to put that limit order. But don't just take pictures, guys. Don't just snap photos arbitrarily and never go back to them, right? Take that picture and annotate. The more you write on a chart, the more these things stick to your brain. Talk about the whys. Why is it strong triggers? Why is it a termination? What are my advantages? What are my disadvantages? And I want you to see this right now. I'm going to click on strong triggers. And this is the way I annotated this chart. I actually have both of them on here. That's kind of nice. There's an arrow, strong triggers because they are wide open. The smalls are above the large. Rule 1 is momentum. Man, if I take this picture 25 times, I don't ever miss strong triggers. Weak triggers, smalls are inside of the large. Anything can happen. Rule number 1 not met. Do you guys think you can see this 25 times in a row, do that work, and confuse it? I don't think you can. I don't believe it's possible. Prove me wrong. Take those 25 pictures. But guys, start filling out that 101 section. And that's exactly what that's designed for. And then just to make sure that you have a little cheat sheet when you take those pictures, this is the high probability trend trade checklist sheet. And this is a huge tool. First, it takes the rules, it takes a checklist, and it shows you what it looks like. Is the market coming from a strong top or bottom? Was there a termination that reversed the market? Guys, if there was, your high probability trend trade over here is the highest high probability trend trade you could ever take. Did you have momentum or was it weakness? You shouldn't confuse the two because you've taken 25 pictures. You should know exactly what it looks like to have rule number 1 met. Termination conditions not true, large chart. Well, there's a termination. There's only the potential to break, and there's that broken area letting me know that my path is clear. And then window of opportunity, the exact same pictures that I teach class with. Reversal bar starts the pullback. Window of opportunity is inside of favorable large triggers, lowest resistance to highest resistance. Here's exactly where your limit order goes, and this is where the market shouldn't go. It's all pretty clearly defined. And then when you go to page 2, guess what? Print page 2 out. Print 10 page 2s out. Put them on your desk. Grab your favorite color of crayon and make sure that you can mark yes to each and every one of these. Never had anybody mark yes to these truthfully and do worse than 70%, guys. And typically it's up in the mid 80s, but I'd rather tell you 70 and have you expecting to lose 3 out of 10 because you're going to make mistakes, and I'd rather, what is it? Under promise, over deliver, right? So guys, print this out. If you're using market replay, use your checklist. Go through, make sure, pause, put yourself in a good position. And then those bring us to my favorite part of the day, guys, the KISS plan. And I'm going to tell stories today because I'm feeling great. And first of all, this KISS plan, guys, it's a stepping stone. The high probability trend trade is your first trade. It's your foundation trade. You're laying the groundwork to become a chart reader. This is the one that wins more than it loses. This is the one that creates confidence. This is the one that teaches you to read your charts, guys. And it's designed to optimize your chances of success with that trade. That's what the KISS plan does for you. Keep it simple, stupid, in case you didn't know what that meant. Most of you did. And I'm not calling you stupid. So how about this? Keep it simple, silly. But through simulation, through study, through class feedback, through continuous practice, guys, you will be empowered to create a plan, and it'll be tailored to your personal goals, and it'll be based on your experience reading the indicators. And that is AI fluffing it up to tell you, guys, when you're a chart reader, you're going to see all the opportunities. When you're a chart reader, when you have these very basic concepts down, patterns are going to jump off of the screen at you. You will adjust your trading plan. But until you have that, keep it simple. And I'm going to tell you, hey, good morning, Jose. Buenos dias. One of the things that I've had happen is people come into this room, and some people are amazing rule followers and some people are kind of cavalier. I've had people come into Nexgen within their first 30 days and follow this KISS plan and get funded in prop firms. Start making profits within the first 3 or 4 weeks, guys. It's easy if you allow it to be. So your simple plan for consistency: don't fight the large chart. Do not fight the large chart, guys. The large chart is it's the big crowd. It's what they want to have happen. It's their momentum. These are the areas that they're reacting to. And the easiest way to commit financial suicide is to trade against strong triggers, guys. Trading against momentum loses more than it wins. That's why having momentum in your favor is rule number one. Trading in determination conditions loses more than it wins. That's why rule number two came to be, because it creates a statistical advantage when you don't do it. And guys, this is a little tongue-in-cheek, and I love this. And Ed, if you're in here, I owe you a nickel. But don't fight the large chart. Go with the flow. And then learn to define your entry. Learn to get into the market where the market is most likely to continue. Learn how to find that window of opportunity. Know exactly what it looks like, guys, because once again, great entries create manageable trades. Great entries give us the ability to have the least amount of risk. Great entries give us the furthest room to get to our profit targets. And once you're in the market where the market is most likely to continue, guys, your initial stop is 4 to 5 ticks above those triggers where the market shouldn't go. And I'm going to take this little management plan, and it is directly from the spreadsheet that I gave you. Once you're in where the market is most likely to continue and you have your stop where the market shouldn't go, you've got to put your hands in the air. You've got to put them under your butt. You've got to roll your seat 6 feet back from your mouse, and you've got to let it play out as a new user. Just let it happen. You're either going to get stopped out. It's cool. It's normal. It's part of it. It's a cost of doing business. Or you're going to get that reversal bar in the direction of your trade. And guys, if you get that reversal bar in the direction of your trade, your first stop movement is to put your stop 2 ticks above that reversal bar, because they've already told you that they're on their way in the direction of the trade, that they're moving with momentum, that they're going the direction of the clear path. And at this point, roll back that 6 feet again. Put your hands on your head. Pet your dog. You're either going to get stopped out for a small loss. It's okay. It's a normal part of a positive equity curve. Losses are not failures. I can't stress that enough. Or it's going to hit your first profit target. And guys, remember, we're here to get paid, right? That's the goal. We're here to make money. We are here to every day win more than we lose. So the KISS plan, isn't that pretty cool, is designed to help you get comfortable getting paid. So your first target is $100 away from your entry. That's it, $100. And that $100 goes into your account. That $100 dries up your sweaty palms. That $100 eradicates every butterfly in your gut, because you now have confidence through the memory of that success. And your next stop placement is going to break even. Absolutely nothing to lose on this trade. This may not be the smartest stop ever, but guess what? You'll craft a plan tailored to your personal goals based on your experience reading the indicators. So for the brand new user, this takes all the risk off, and you just got paid, and it makes it easier to hold for the second target. So you're either going to get stopped out, break even, and I'm telling you that is not a very painful endeavor, or it's going to hit your second target. And your second target is only $200 away from your beautiful entry. Only $200 is what they have to get. And guys, if they do, you're out of that trade. The contracts are off, the trade is over, the sweat begins to dry up, and you just made $300 in probably 3 to 4 minutes. Let's see, the entry was at 51 and change. The exit was at about 53 on this particular trade, guys. And $300, this is my favorite part about what we do. $300, if that's the best that you could do every day, is a $75,000 year. Let that sink in for a second. $75,000 from one trade that goes the distance. $75,000 from 3 trades that get stopped out break even after the first profit. Guys, the goal is to get paid. As you get better, it gets easier to make $500 a day. It gets easier to make $800 a day. It gets easier to make $1,000 a day. Hell, Pete's in here, and he's mad if he doesn't make $1,800 a day. And I think yesterday by 7:45 a.m., he was what were you up, like $2,400? $2,800? I don't know. You were halfway to today's goal before breakfast yesterday. Guys, learn how to get paid. I can't stress that enough. Be willing to take profits at areas. Be willing to protect yourself, guys. And then when you've practiced this a little bit, when you've been with me for 20 days and you're like, man, I can nail these entries. I'm starting to feel comfortable with everything. I'm going to go to one of those prop firms. I'm going to put my kids' college tuition up against it, guys. There's 2 things you have to know before you jump off of that simulator. You have to know why you're going to enter a trade. You've got to have rules that have been proven to win more than they lose. You've got to be able to define your spot, define your entry, and then you have to know why you will exit. You have to know where your stops go. You have to know what your targets are. And you have to know the conditions that may cut your trade short. And rules are patterns proven to win more than they lose, guys. Commit to the rules. The more consistent in action you become by following rules, the more consistent in profits you'll likely become, guys. And it's the process that yields results. It's focus on the execution, not the result. Rules help to remove the emotion associated with trading. There is a gentleman, unfortunately he's no longer with us, Mark Douglas, talks about the psychology of trading a lot. And he said, if you know, if you believe, if you trust that your methodology wins more than it loses, like the high probability trend trade does, then it doesn't matter what happens in the trade. It doesn't matter if it wins or loses. It's not the one trade that defines your plan, but rather the sample, guys. And when you know for certain through your study that your trade wins more than it loses, your only focus is following the rules for that trade. Because what happens is you don't worry about whether you win or lose because you believe that you will win more than you lose. And you won't worry about where your stop goes because you know where the most intelligent spot is. And it really does. It pulls the emotions out. So if I'm in a high probability trend trade, initially my KISS plan is why I'm going to get out. As I grow with the software, there's going to be more and more things that you'll see that may make your management a little aggressive. If I take a 50-50 trade, that medium probability trade, not only does it have a different set of rules to get in, but it also has a different set of rules to get out. And if I'm not good at this one yet, this one may confuse me. I may begin to combine rules. And that's even more true if I add momentum trades or HVA trades. So I encourage you guys, get really good at one thing. Get really good at finding great entries. Get really good at defining where the market is most likely to continue. And then once you can do that, all the doors open. So I'm going to drop my spreadsheet in the room again because I want you guys to really have access to that and I want to see you using it. I'm going to give you Chart Reading 101. I'm going to give you the High Probability Trend Trade Checklist. I'm going to give you the KISS plan. I'm going to give you that daily goals that lets you know what it translates to annually. I'm going to give you the exit conditions. And guys, this exit condition sheet is a great way for you to start working on your plan beyond the very basics. And I gave you the order of picks. And that is a PDF version of the PowerPoint that I use to teach the room. Let's close some stuff. There's a lot open. So what do we see right now on crude oil? We see a termination condition that just reversed the market. We call that a strong top. What do you guys think? Give me a Y in the room if I have odds favorable momentum. Or give me an N if you say, Mark, that's not odds favorable momentum. And I want you to see this amazing thing. 5 of you are going to tell me that it's into a termination condition. Yes, on the large. It's momentum, right? So can we say without question that rule number 1 is met? JK, do you see it? Good morning, Ramon. Do you see the momentum? Claire, nice to see you in here. Do you see it? All right, so rule number 1 is met. Let's go to rule number 2. Do I have a clear path? Guys, price reached Fibonacci support, and my triggers have remained above. Good morning, Steve Diego. Hey, Dream Big. I like that name. We are going to dream big. Guys, price reached Fibonacci support and my triggers have remained above for the time being. Do I have a clear path? Is rule number 2 not met? It's rule number 2 met. Sorry, I leading the witness there. What do we think, guys? Should I be looking for areas inside of triggers or should I be pumping the brakes, waiting to see what happens? Hell, I don't know, Mark. I'm just listening. I like to watch Tiger Woods videos. I'll be a great golfer if I see enough of them. Guys, that's a termination condition, textbook. And that tells me, get the hell off this screen. I don't have any rules met. Right now, I'm directly into a termination condition. But the cool thing is I had one of those 50-50s. And if I circle that tail, great googly moogly, it came right back to support inside of favorable large triggers. Is anybody going to show me a 5-point winner here? Anybody going to post that in the room? 50-50, no divergence from a strong bottom. Somebody show me a winner here. You're on NASDAQ, Wayne? Right on. But that's what we teach, guys, every day. And that's fair. You missed it taking the crude oil trade. That happens sometimes. Wayne, you just won $1,000? I like it. I will be expecting to be on your Christmas card list then. So, guys, that's my first hour. I say the same thing every day. I show the same thing every day. I talk about the same rules every day. And I open up the platform to you to share your pictures every day. And that's what we're going to do in the second half of class, guys. So what I'm going to do is I'm going to come back and look at your charts. And we're going to talk about momentum. And we're going to talk about the clear path. And we're going to talk about the entry area. And I'm not going to shame you if you broke a rule. I'm not going to beat you up. I'm not going to knock you down. What I'm going to do is I'm going to say, hey, thank you so much for describing momentum, the clear path, and the entry. We're going to see if there's an opportunity to read the chart a little more accurately. We're going to see if there was an opportunity to get in with a little less risk. We're going to see if there was an opportunity to take bigger profits. And you and I are going to walk hand in hand, getting you exactly where it is you told us you wanted to be. So I will be back in about 5 minutes, but I want to say this real quick, especially for my new users. I want you coming at me like I am absolutely full of shit. Sorry, YouTubers, I'm not supposed to swear, but I think that it's impactful. I want you to be skeptical. I want you to doubt. But right now, you have everything that you need to prove me wrong. You have the rules. You know exactly what they look like. You know exactly how to study them. You have a rock solid plan that you can follow to the letter, and you can get feedback in this room to make sure that you're following it. And I'm going to tell you right now with a level of cockiness that if you come at me trying to prove me wrong, you will be with Nexgen forever. If you don't do the work, you're going to get out of this exactly what you put into it. If you half-ass your education, you're probably going to get half-ass results. So take advantage of the feedback, take advantage of the simplicity, and get to where you want to be, guys. I will see you in 5 minutes. I'm going to go pet my dog and refill my water. See you guys in 5. Post them if you got them. All right, guys, let's get back to work. Termination condition seems to be holding, doesn't it? Is anyone else thankful that they have these big red lines on their chart telling them don't take that long trade into it? Look at this. Resistance, reversed it. Man, probably some people getting paid in there. We'll see. We'll see what happens. So I'm going to scroll up to the very top. For those of you that haven't been here before, I will scroll to the very top of the chat box. So sometimes I might miss a question. If I do me a favor. Just tell me. Go, hey, Mark, you missed my question. I need you to tell me what's going on. All right. Miss Jen got us going today. And Jen says, termination, weak triggers, right at a fib, large didn't break. Trades directly into support. And Jen says, man, I just have to wait. I have to wait for my rules to be met. They're not met yet. My commitment to my bank account is that I won't trade into termination conditions, that I won't hope areas break, but rather I'll force them to break. Great job, Jen. Cheetah. Guys make it so hard for me to see sometimes. Just a little heads up. This is for everybody. I know that you guys love to show a million different things on your charts. You could actually, just throwing this out there, you could give me that right there, and that actually gives me everything that I need, and it makes it easier so I don't have to blow it all up and go it into two separate pictures. Termination condition, weak bottom, absolutely. Weak triggers, there's the reversal, weak bottom. What did your small chart look like? Just no reason to take a short there, maybe too soon for a long, Cheetah. And I'm not sure if there's anything else that I'm looking for here. Good stuff. All right, Miss Chen. Whoops, sorry. Try to get these broken down a little bit. That termination condition turned into a 50-50. And divergence, 50-50 rules not met. And Jen, once again, you're just saying, I'm going to hold for a second. The mid-band's not a termination. The triggers are not a full bar away. Nicely done, Jen. Just following rules all morning. Split triggers, 50-50. Not a termination. So, Jen, can I ask you, can you guys hear me? Nobody's really talking. Just, if I have a termination, right, and I have odds favorable, and it's 50-50, and the mid-band's not a problem for me, is it possible, Jen, that with these split triggers, a reversal bar might be an acceptable entry because of the termination before? And I know that divergence tells you, hey, don't do it, right? But let's stack advantages. And this is one of the things that are going to happen as you begin to speak to yourself in terms of advantages. It was the divergence. So the divergence, right? Don't jump in arbitrarily, right? Especially on the NASDAQ. Maybe wait for a little confirmation, be on the correct side of the triggers, because the large chart says, hey, not only did this key area stop the market, but it reversed it. And what does that tell us? It tells us that these areas are more likely to break. And Jen, when I go back to the KISS plan, and I'm going to bring this up real quick. When I go back to the KISS plan and I talk about that 50-50 look, there's some things that are very important on that potential to break. And the reason this is the first thing on the checklist from a strong top or bottom, because when the market reverses from a key Fibonacci area, what that's saying, and let me go to Jen's picture to show you, look what the buyers did all the way up, absolutely crushed it. And then they get to Fibonacci resistance and they just can't do anymore. They're like, whatever. Seller's like, yeah, we're done with you. That's it. We told you where the line in the sand was. You tried to break it. You couldn't. We reversed it. And not only did we reverse it, we gave you the best momentum going the other direction. Are you following me, Jen? This is the precursor for the great stuff, right? So one of the things, and I think this is a natural progression, and I could be wrong, and it doesn't have to be. If I have a strong top or bottom on my 13-2, I am willing to forego one divergence if everything else is great. I'm willing to do it if I have a strong top or bottom. And guys, the second you do that, you're no longer optimizing your chances of success. What you're doing is you're relying on your ability to see advantages, to grow outside of that very basic. And Jen, this doesn't faze me at all. And I'm going to tell you, I took that entry because of that strong top, because of where we were coming from. And it was pretty cool. It was a pretty easy trade. But this is one of the things that happen as you grow. I love it, and I love that you're adhering to your rules, and I think that's absolutely amazing. But one of the things that I used to feel like I painted you guys in a box to keep it very simple. Now I like looking at these, and I like saying, hey, let's talk about where you're going. Because one of the great things with Nexgen software is that while we start off pretty simple, guys, nobody stays in simplicity. You get too smart for that. Eventually, like my fourth time in third grade, they're like, dude, Mark, go to fourth grade. You've got this. So you will grow. And that's just one of those growth points, I think. All right, Pete, we've got a few from Pete here. Market reversed at the 1-to-1s. Prior divergence triggers roll. Down separated. Odds favorable momentum. Let me see where you're getting in. Pete, you're getting in below the fib, right around 85 with all of that momentum. Normally you wouldn't enter a trade before London opens because of the lack of volume, but the big chart looked so good you couldn't resist. And I think this is one of those ones, right? As you're coming into this at 84, maybe not a clear path yet, but with all that momentum, you're willing to take a shot. And guys, this is one of those things that I'm going to say, and I know that Pete has a plan. And I don't question Pete's plan because Pete's really good at what he does and he knows what he's looking for. But for new users, if you are going to just jump in, and this is the one that I lovingly refer to as the JTFI trade, jump the fudge in trade, what you're relying on is momentum. You are saying, and let me do this, you're saying this is so strong and this is so strong that I'll just jump the fudge in, right? And guys, that's great. But once you get a close on the wrong side of those triggers, your momentum is done. You're on the wrong side of momentum. And I see people hold these trades for losses. I see people hold these trades despite the problems. Pete knows that with this look, the pullback to resistance is a great opportunity to come down. If you're a brand new user, learn how to get paid. If you're an experienced user, you're going to know that when your momentum trade fails, it typically becomes a trend trade, if the large chart says. Pete knew that, and I think break even was a little late on this one. I really do. But Pete was holding for the move. And then when it pulls back to resistance inside of the triggers here, he says, all right, it's a 50-50. 79 is my trouble spot, and you'll notice that when it doesn't get through, he takes an exit, and it's just a lot of break-evens going on there. That's heads-up trading. Nicely done, Pete. And then once again, there's that jump, guys. Odds favorable. Absolutely nothing in the way. When he clears the trouble on a small chart, he gets in. When he loses the momentum on a small chart, it just turns right into a trend trade, and he takes it up to the fib. Nicely done. And then one more. Termination. Everything rolls. He gets to the other side, just takes a momentum trade, and once again holds it to break even. And I think that with the split triggers, once again, guys, it's okay to get paid. It's all right to get paid. Nice trading this morning, Pete. Very heads up management. And once you understand, once you start looking, guys, you know when it's appropriate to go to break even. And you know when it's time to jump ship. And you start knowing when it's time to hold for a little longer. This is one of my favorite trades. And Ron taught me this trade. Price clears trouble with odds favorable momentum. Momentum and a clear path, guys. And Ron says normally he wouldn't trade into a line, but price was jumping hard. The scissors were open. Base hits are good. And on a 6 lot, $640 in 30 seconds. And you notice that he gets out before trouble, guys. And this is one of those things. If you just jump in, it's get paid. If all you're relying on is momentum, momentum's going to run out, guys. Learn how to collect those profits. All right, Josh. Good top. Can we call this a good top, Josh? All right, let me rephrase that. If it retraces all the way to resistance, everything stays below, and those large triggers can't even roll, this may not fit the definition of a good top, Josh, but that's a pretty awesome look. You got a huge 17-point retracement. No, you got, almost 17 point. And the large triggers couldn't even roll. I love this look. So as it's heading down, you've got momentum. You've got the clear path. You take the perfect entry, and you take it on the way down, and you get paid. I love it. What a great trade. And one of the things that guys, and I see everything, it annoys Jen. Entered at 1-to-1s inside of favorable large triggers, right? Josh, you didn't enter at 1-to-1s inside of favorable large triggers. You let it run right past it, and then you got back in on its way down below triggers, right? So you didn't have a limit order in the entry spot. You said, I'm going to force it to go in the direction of my trade. So what happens, Josh, if that area inside of favorable large triggers holds and it drops right there? You're going to be in down here at 66 instead of 71. And guys, this is where trusting entries pays dividends. This is where trusting entries pays dividends. Because Josh said, I hope it goes higher and then comes back. I don't believe in momentum and a clear path in an area inside of favorable large triggers. But this doesn't always happen. And Josh, I love your trade, and I'm going to stick to my guns on that. But your entry was 3 bars sooner. Your stop placement was right up there at around 76, keeps you safe, 77. You didn't know that it was going to come back down, right? And you're thinking, I'll avoid a loser if it doesn't. But what you may have done is avoided a winner. Just something to think about. Nothing worse than taking a great trade and having me go, dude. All right. So Josh says he was playing it safe. Are those your rules, Josh? Are these the rules that you're following? Cool. So where in these rules does it say don't take the right entry? Where in these rules does it say form an opinion? Create a safety barrier. Your safety barrier is momentum, clear path, and an entry area. And I'm not trying to beat you up at all, Josh. I hope you know that. But what I'm saying, guys, is every time you make a gut-based decision outside of your rules, you decrease the effectiveness of your rules. Every time you let your emotions keep you out of the correct entry, every time you let your emotions take you out of the trade too soon, guys, you're setting yourself up for failure. You're setting yourself up to miss the winners. You're setting yourself up to take the losers that you shouldn't be taking. So you guys do whatever you want. I don't give trading advice. I refuse to give trading advice. But I can tell you that you've got to learn to trust your rules. And then you've got to commit to following your rules. You're not playing it safe. You're altering the plan that has been proven to win more than it loses, guys. Trend was down. Triggers were open. All great areas, even though technically outside of the large triggers. And then Pete, one of those times where a reversal bar is that little confirmation you need, right? And that's 3 times where that confirmation, because the areas weren't inside of triggers, gets you into beautiful trades. I love this picture, guys. And this is next level. Brand new users say, I have to have an area inside of triggers. Once you're a chart reader, you say, I've seen this one. I'm going to wait for confirmation because I don't know if this midband's going to stop it. I don't know if it's going to go to one of these fibs. Hell, I don't know if it's going to reverse. But once I get confirmation, my risk is established, and it's pretty easy to make some money all the way down. Great, great picture. And then Pete just says, I'm going to get in after trouble and hold to the fib. And that's experience. Nicely done. Who's this Ron C fella talking about base hits? Oh, look at that. Odds favorable, room to trouble. What did he do? He jumped in and jumped out. Base hit. Guys, one of the things that you're going to notice is that the most successful traders in this room take trades that look exactly the same every freaking time. They take trades because the rules are met. They take trades with the exact same look 99 out of 100 times. Why? Because they believe in it and they trust it. And this is one of the things, and one of the things that Josh wanted me to shut up about because he felt targeted. Exactly the same trades over and over and over. Consistency. Doing it because the rules are met, not because your guts told you not to. Guys, my guts told me to get back together with this redhead that tried to run me over with a pickup truck. My guts were wrong. My rule should have been, don't do that, right? Guys, your guts are going to lie to you. That little devil on your shoulder is going to lie to you. But you'll notice the consistent people are doing the same darn thing every time. The same entry every time. The same management plan every time. The same tiny ass pictures every time. Where's your pivot? Big arrow. HVA trade, left runner on, 2 off at the 1-to-1s, and then carried the final one all the way down to the bottom. Everything said down, and Gary went down. What a great trade. There's the large chart. Off the termination, down it goes. Takes it directly to trouble. Gary, great trading, man. Jim. Strong bottom, odds favorable, clear path, pull back to an area inside of triggers. The smalls weren't a full bar away, so you waited 17 days to get in. I said nice trade, Gary. Jen, I want you to get up from your computer and run a lap. What the hell is that? Market moved fast. You didn't have a buy stop in. But you do know where your correct entry is, right? Beautiful trade. Beautiful trade. Gary, you had a termination, odds favorable. You got in. You got out at trouble. Absolutely beautiful. You don't need feedback on that. You know it's a great trade. The NASDAQ is fast. Yes, it is. And then, guys, out at trouble. In on the pullback, out at trouble. Jen, this is a great job. Gary giving me all the information that I don't need. Termination. You don't have any rules, right? Termination, HVA trade, beautiful exit, beautiful exit. But I know your rules, Gary, so we're good. Don't get sassy, Gary. Don't you get sassy. Great job, man. NASDAQ's giving you heartburn. It's just because you don't have repetitions on it. That's all it is. You just don't have the reps yet. You'll get there. I love the NASDAQ, guys. I really do. And I think there's a lot of opportunity on the NASDAQ. But it's crazy in the beginning. It really is. Odds favorable. I can't read that chart. Momentum trade. In with momentum, out at trouble. Nicely done. So it looks, I can't tell, but it looks like you just jumped in after it worked itself out. So Gary, just a quick question. Just a quick question. Why are you running all of your market flow overlay on your entry chart and still running market flow over here? That feels excessive. If you can read it, cool. But that feels a little redundant. But nice trade again. Too many mines, guys. Too many mines. Could be seen as a weak bottom because smalls are basically on top of the fib. How about, this is Morgan, right? Morgan, how about the large? Yeah, that's close, man. That's horseshoes and hand grenades there, isn't it? I think this is one of those ones where you just make a judgment call. So you start gauging the advantages up here. No clear path. There isn't much space to go. Don't be in long. No divergence. And it pulls right back 2 ticks above. And you're taking quick profits as you come back into that area. And you use the HVA line to add a little giddy up to it. Momentum, 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 and you had the HVA line there, which is nice. And now you're just waiting to see, and you're not willing to lose. Should have sold both, but was annotating during the trade. Ha. It's only sin because you're just learning to use a market flow. So Morgan, let's talk market flow. Your large chart said you had a bunch of momentum from a strong bottom, but you didn't have a clear path. Your small chart said that nobody's slowing down, so they're probably going to retest. And then your market flow chart said, let me give you this big, bold green line in the sand where if the sellers try to push down, the buyers are most likely to give at least a momentary shove up. I think you absolutely nailed this trade. And I think every bit of it makes sense. And I think you should annotate charts when the trade is over, Morgan. When the trade is over. Nobody's ever the middle of a date. Dear diary, this dinner's going great. Let me ignore her for a second. Right? Finish your trade. You killed it, dude. What a great job. Nicely done. Wayne. Holy annotations. White bar trade. What does that mean? That means that Wayne had a termination condition somewhere. So, Wayne, not a real white bar trade. Because you didn't have a termination. So if we're going by the rule of the law, Wayne, you need a termination. There would have been one right there for the long, right after your exit. But let's go through it. Odds favorable, momentum up in an uptrend, clear path. Odds favorable, momentum up. You got a pivot stop out. Everything says up. Small triggers are above. But you didn't have weak triggers, brother. You had odds favorable momentum to the upside. Do you see it? Large chart has to lead the way. Kurt. Stuff just falls out of my face sometimes, man. So when the 8-3s cross, I mean, I'm not even sure you had weak triggers here yet because your smalls are still above the large. Does that make sense, Wayne? I love the way you did it. I love your exits, and I love that you're looking for key things. This is a lower probability. Hope that stuff doesn't go down. Honestly, I probably would have been long at this mid-band right at the triggers and then had to manage out with a third divergence with that look on the large chart. And then this is your true to form white bar trade. That's your termination condition. There's your triggers roll. There's your white bar. And your long was somewhere right about where your close is to go up. Do you see it? Can you see the difference? One has fib support, the other doesn't. I love the trade, dude. But this is the one that's probably going to work more than that one. And you missed the best one because you were doing the happy me dance on that one. White bar was late on the second. You were late or the white bar was late? I like it. That's my entry right there. Kapow pow. Zoom. Zing. Great trade, dude. And guys, I won't beat you up and tell you you're wrong, but I will point out the things that I notice. Because sometimes we don't always get them. You need the white bar to be the one after the bottom for your rules. Okay. Oh, so since it was the second bar, it didn't fit your rules. It would have had to have been that one. Okay, cool. Thank you for telling me that. Because, guys, when you tell me your rules, I'll hold you accountable to them. So, Wayne, it annoys the hell out of my wife. I don't forget things. So when you show me that white bar trade and it wasn't the, I'm going to be like, dude, we talked about this. Great trading. Great trading. Who is this? Wayne, was this you again? Different annotations. Weak top, mid band, gap theory, and you said, let's go close the gap. And look at that. New to in and out quick on the gap trade, 11 seconds. Dude, that's awesome. So guys, let's talk about what he just did here, if you don't understand. It didn't print on the replay? That's okay, this is awesome. So guys, if price reaches a mid-band, actually if price reaches a fib, if price reaches a mid-band, if price reaches 1-to-1, if these large triggers stay more than a bar away, this is this gap theory. Price is likely to close the gap to those triggers. Does everyone remember when we said price loves to return to large triggers, and that's kind of a gospel truth? If you go head first into an area, no matter what the area is, fibs, midband, 1-to-1s, this is how you define a midband as a termination condition. Guys, this gap theory says that price snaps back to the triggers. It's like a slingshot. Wayne said, man, I studied gap theory. I called all my friends. I told them that this is something that can happen. I went to the client trades and I clicked on every link that says gap theory. And over and over and over, it closed that gap one time after another. And Wayne said, you know what? I'm going to learn how to get paid as it closes that gap. I'm not just going to jump in and hope. I'm going to let things roll a little bit. I'm going to get on the correct side of the small triggers. And I'm going to go rock star and make $300 in a couple seconds. Man, Wayne. That's that mechanic brain. That's that let me see how things work and then figure out how to work it brain. Steve Diego, after John's last week, trying some trades where momentum and trigger looks can break fibs. Anyways, breaks strict term rules, but that's okay. So Steve, the one thing, let me see. Let me read what you have. Should have held for last fib. Should have waited at least for price to clear fibs. Price above, large, strong triggers, small, strong triggers separated from large. This momentum and trigger looks. Price should keep breaking fibs. Absolute bullshit, Steve. Respectfully, price has the potential to break fibs. Price should never do anything. Should implies that you know what's going to happen. Is that fair? Should implies that you know what's going to happen. What you can say is it has the potential to break because of the momentum. I'm willing to take a chance. But guys, the second you start using words like it should, it will, it has to, what you've done is you've convinced yourself that you know what the market's going to do. And if you keep your language, it has the potential to break these fibs because of the level of momentum. Sorry, you know I'm a language guy, Steve. What it does, Steve, is it gets your guard up if for some reason it doesn't. Does that make sense? If I say to myself, because of this look, it has the potential to break, I'm willing to take a shot. If it starts retracing horribly, then you've got it in your head that this is in fact a place that can ruin your good time. The same reason you got paid at the next one. The same reason you get paid at this one, right? And this is one of those looks, and this is a beautiful look. But here's the thing that I want to talk about, because I love everything about this. Whoops, wrong one. This termination condition that reverses the market, Steve, this is what makes me believe that these areas have a higher potential to break. Does that make sense? When I get a key area that reverses the market, man, that's when these areas are more likely to break. That's when that potential goes up. And that's when these trades are just sexy as all get out. With the pivot stop out. Or the piece of, pivot stop out, right? Fast fingers on the keyboard. So I like it. But and this is one of those things, and that's not just for you, Steve. And I am a language person. Should versus can, right? Potential. All this does, and this is for all you newer folks, this gets your brain on board, on BORAD, with the idea that you have no idea and it needs to be managed if something changes. And that's the only reason that I bring that up. When you know what you're up against, guys, you know which hat to put on. And when I say that, and since this is the last picture, I'm going to go a little. You still had reasonable stops. That's cool. That's not what we're talking about, but I get it. Here, when I took this trade, I took my entry, I got some profits, and because of this look, the exact same way that Steve did it, I said because of odds favorable momentum, because of a clear path, the market has the potential to go all the way down to this fib. Therefore, I'm willing to hold a contract. Does that make sense? But if I say the market will go down to this fib, the market should go down to this fib, the market has to go down to this fib, and something changes, I might hold that trade forever and give all my profits back. So I think language is important. Not to everybody. You engineers couldn't care less about it. But I really do think the way you speak to yourself and understanding what's in front of you, it lets you know. This one let me get a little loosey-goosey with it, right? So, did I miss your second trade on here? Oh, I haven't clicked on it yet. Now I'm going to click on it. Odds favorable, everything screaming, price below, strong triggers, small strong triggers, separate from large. With this momentum, price has the potential to get to the low. You get in with all that momentum, and you get out just above trouble, 57. You get out at 61, and it goes right to where your chart read said. Great job. I love this one. JTFI. It is absolutely screaming, and with that level of momentum, you know where it has the potential to go, and that's exactly where you got paid. Really nicely done. Ron, I didn't miss it. You missed me talking about it. I actually praised you a lot when I opened this one. Because momentum, clear path, get paid. Momentum, clear path, get paid. And this is where I reminded the classroom that the most consistent traders that you'll see seem to be doing the exact same thing over and over. Steve Diego, Exhibit A. Momentum, go. Momentum, go. Momentum, go. And you'll see these guys that are trading outside of the high probability trend trade. And even though they don't follow the high probability trend trade rules, they most definitely follow a plan that was put in place by that user, one that seems to rely on momentum and a clear path. No, we're all knuckleheads. I love that word, knucklehead. I'm glad that one's coming back. But that's it, and that's consistency, guys. Doing the same thing over and over because it's been proven to win more than it loses. All right, odds favorable, yep. Clear path, yep. Don't believe that it's going to go. So you get in late, get out early. And then this one you show a little trust. I love it, Josh. And look at that, it's a bigger winner. This one was good for 50 bucks getting in late. This one was good for 100 bucks taking the correct entry. It's hard, isn't it, Josh? It's hard to buy the market when it's on its way down. I like that, Steve. It's hard because what if I get run over? And Josh, I promise you, you will get to the point to where you just don't care. You'll get in at the best area with this look and you'll say, those assholes have to come get me. I love it. I love your first trade. It's a great read. I love your second trade. But look what they did. They said, oh, check it out. Josh got in. Let's go back to the area inside of favorable large triggers just to piss him off. Oh, you had your NASDAQ settings? Right on. They're like, Josh jumped in. Let's go back to the right entry just to prove a point. And right about here, Josh goes, yeah, those mother scratchers, they're not going to do that to me again. Great trade, dude. Great trading, Josh. Oh, man. I'm sorry about that. Do you know how many people hear me in their head? You know, when I used to be a personal trainer, I had a guy's wife call me. Got my phone number from her husband, and I recognize his number, and I answer the phone. I'm like, hey, what's up, Corey? And it's his wife. And his wife doesn't say anything except Mark said, Mark says, Mark says. She goes, I'm about damn sick of Mark says. And I was like, oh my gosh. And you guys will hear that. That was one of my favorite phone calls ever. Because it meant that not only was he listening, he was sharing it with other people to reinforce the lesson. So, great stuff. And then Pete says, man, this is the one that just does it for me. Odds favorable, clear path. Let me poke the bear that is Josh by getting in at the mid-band inside of favorable large triggers. And I'll hold that one until the second divergence prints. Nicely done. Everybody, beautiful job this morning. Great trading this morning. I'm so glad the market's throwing those opportunities out there for you. And it's time for a break. So as I go into break here, I want you to ask yourself, what's my thing? What's the thing I need help with? What's the rule I need a little help with? Do I jump in early? Do I get out late? And guys, I think this is a great example of it. And Josh, thank you so much for this. Every time you post in the room, guys, we're going to have a conversation. And this is one of the things. You got to know what you're doing right and what you're doing wrong so that you can improve. And one of the greatest things is Josh is showing me these entries, believing that he's paying it safe, right? But all he's doing is he's cutting profits short because his ability to read this chart is phenomenal. And eventually, I nag enough that he takes the perfect entry and he doubles his profits, right? And I promise you guys, I will get into your head and you're going to hear those words. You're going to hear those words over and over. You will hear my voice. And that's one of the great things about the education that Nexgen offers is it is in the moment, every day, feedback for what it is that you're doing. Um, can we talk about your break-even trades and when it's better to? Yeah, absolutely we can, Pete. So let me take 5 minutes. When I come back, we'll start talking about it. And I'll scroll up and I'll open up those three and I'll give you my full 2 cents on it. And honestly, I can give you my full 2 cents on it right now. Guys, I want you to see this. As long as price stays left of these small triggers, as long as it doesn't close above, this market will continue down. Once I get a close on the wrong side of these triggers, it's probably going to close the gap to those large triggers. So Pete, let that resonate a little bit. And that's exactly what we're going to talk about when we talk about when it's better to take profits than to go break even on these trades. So I'll be back in about 5 minutes, guys. Go stretch your legs. hour. Pete, does that make sense? When I talk about momentum trades, guys, this is one of the greatest lessons. And then let's just do the same thing here. As long as it doesn't close on the wrong side of these small triggers, guess what? It's going up. So if you're in a trade with momentum, if you're in a trade because of momentum, if you're in a trade and the only reason you jumped into that trade was because of momentum on two charts, this right here is where I put my stop. I force it to create a reversal bar because I know as long as it doesn't close on the wrong side of those triggers, it's going to continue up. So Pete, and there it is. There's my close. Let's see if it comes back to the area right there at the triggers. 50-50, odds favorable. Oh, I'm outside of the triggers, so I'm going to force it to give me a reversal bar. But do you see how that happened? Once I get to the wrong side of those small triggers, guys, it can turn into a trend trade. It can turn into something else. It can go the other way forever. So when we talk about taking profits, when we talk about getting into the market because of momentum, and this is one of the reasons that I think having an exit plan, and I'm going to go back to this, and I'm going to try and turn this into a big lesson because I don't have a lot of pictures to look at. When I talk about exit conditions, absolutely I will. If I'm in a momentum trade, what will it take to get me out? Close on the other side of the trigger. So that's what we just talked about, Josh. And I want to show you something too. I will, Pete. I'll show you. But before I show you on your charts, Steve Diego, I'm going to send you a nickel for this lesson that you gave people. Steve Diego got in because of momentum. Notice how he never got a close. He never got a reversal bar the whole way up. Josh, do you see it? He got some fluctuations, but this was the first close on the wrong side of the triggers. Steve Diego rock-starred this mofo all the way up. And then I want you to see the next one. Easy to stay on the momentum, and then that's the beginning of the end. So, thank you, Steve. And he's not even in here. Oh, yeah, he is. I see him. So, Steve, I mean, beautiful. But if you're thinking, man, I want to hold longer. I want to get deeper into this move. I should have held for the next fib. Do you see how you could have? Because you never got that close? Yeah, that's a big one. I love that one. All right, so here we go. Oops, hold on. We'll start on the first chart. So we're going to use Pete's charts from this morning and talk about it, right? So Pete, you've got momentum. Everything says, giddy up, let's go, yeehaw, right? And you jump in. And you're in at, I don't know, it's covered up, 83. And then you get the close right here, right? And you could have made 40 or 50 bucks. It's not a lot, but you exit on the reversal bar, especially with all this trouble. And then if you choose to take the trend trade, you take it, and then you can get out of that one with divergence maybe, and then you take the next trend trade back into trouble. But Pete, these aren't designed to be home runs. And some people everyone has different pain tolerances, I guess is the best way to put it. Some people can hold through retracement. Some people would rather get paid. Some people think that it has to be $1,000 every trade. Some people are very content with 100. But this is one of those times, If momentum gets me in, doesn't it stand to reason that momentum gets me out? Because, and let me show you why I say this. Let me show you exactly why I say this. Back to the basic lessons. On this retracement right here, this is where the market shouldn't go. Doesn't that seem excessive? PPF won't let you hold that long. But getting in here, getting out here, re-entering, getting out, you're such a great chart reader, Pete, that what you're going to find is that it's fun to have that confidence that it's going to go. But just get paid. If it's momentum, let a loss of momentum take you out. If it's a trend trade with a clear path, you might hold a little longer. And then this is another one of those instances right here where you get in. And this was so close, this makes sense, right? You got in and you know that this is your continuation point. So you ride it back up to the next level. And notice that the market doesn't go down until you get the reversal bar. So there it is again, guys, that lesson. The market's on the other side of the triggers. It keeps going up. You never get a close on the wrong side of the triggers. It keeps going up. And you get the second and third bar on the first close below. You're in actually on the wrong side, momentum. That's cool. And then once you get that loss of momentum, notice that you're on the wrong side of those triggers. Take your 50 bucks. Hell, you trade 4 lots. Take your 200 bucks. And then wait for the trend trade. If you so desire. I don't give trading advice. But does that make sense, everybody? And this was one of the things that I studied a lot. Check it out. Holy crap. Not again. Remember I said since it's not there, wait for the reversal bar? If you just jumped in, you haven't gotten a close on the wrong side yet. So, Pete, can I address that and not feel like I'm beating up your trading plan? Your goal is always 20 ticks, right? On 4 contracts. So, let me take a picture here. Your goal is 20 ticks, right? So if you get in right here, you want to make sure that you have 20 ticks to trouble. Am I hearing that correctly? Okay. I'm going to give my 2 cents, and it's worth exactly what you paid for it. My rules say have 20 ticks to my target. Let me change that. My entry rules. My management rules remind me that stuff can change and I need an exit plan if my advantage is gone, even if I don't hit my target. So if I jump in here and I've got the room, that's great. But if my advantage of momentum on my momentum trade goes away, well, maybe I exit, right? And then I just simply get back in on the trend trade with all that momentum, and now it makes more sense. The momentum trade is like the first one. The momentum trade is it's the appetizer. And if it goes awesome, you can use that no closes on the wrong side to hold it longer. But when the advantage goes away, it's all right to exit. It's all right to wait for the next trade. And I'm not only speaking to Pete. So I hope that makes sense. My entry rules say have room to the target, right? Every trend trade I take has room to the target. My management rules say that if something changes on my way to that target, I have to be willing to exit. Josh, have an awesome afternoon, dude. Great trading. And I think this is what gets people. If I'm in a trend trade and I have room to my target, awesome. But if I get divergence from a 1-to-1 before I get to that target, I'm willing to take an exit and look for a re-entry. If I have a second lower divergence, right? So knowing what it is that'll get you out, and you had an entry at 70, and it just missed you. It didn't make the mid band, huh? So Jerry, just something to think about. If you're a tick or two above that mid band, right? And it doesn't quite get it. What's changed in that trade other than missing you by a tick? Would it be okay to get in with a reversal bar that missed your entry by a tick, to put your stop just below, and to say, you know what, with this look on the large chart, I didn't get my best entry, but my stop's in place. Maybe I'll take the trade. And this may be an advance, right? Something that you work into. But when my large chart looks like this, and let's do this. Is there anything on this chart that suggests that market's going to reverse? Nothing. Is there anything on this chart that suggests it's going to reverse? Nothing. This is when that would have been 11 ticks. So how much room did you have to get paid? If you're in at 81 and your fib's not till 13, is there room for you to still get paid? Is there room for you to manage? And I'm not saying jump into trades, right? I'm not saying change your plan on the fly. But what I'm saying is that if everything is perfect, and I accidentally closed out my crude oil. If everything is perfect and they miss me by a tick, there's times when I'm willing to take that shot. I know that my stop's going behind the reversal bar. It would have anyway if it had bounced off the mid band. So just, it's something to think about. I'm not saying change your plan. And I'm definitely not saying just for the hell of it jump in. I'm just saying that there may be opportunities, right? And then Pete said there's that sucker long on the mid band with divergence. Well, go back and look at some of them, Jerry. And look at the ones where, and this is a good example of it. Your mid-band's on the wrong side of the triggers, right? Your mid-band's where the market shouldn't go. When it gets to that mid-band, you don't know if the mid-band's going to hold it anyway. Because I'm on the wrong side of the triggers. Most of the people in this room would insist on a reversal bar anyway at this point. Get a little confirmation. The same is true here. There's no reason to believe this mid-band's going to hold. I'm going to wait for a reversal bar. I still don't have momentum. I don't have a clear path. But rather than arbitrarily getting in, that little bit of confirmation is the price that you pay when it isn't perfect. So just stuff to think about, guys. I'm not rewriting your trading plans. Ron, price clears trouble. The momentum is there. I jump in. I jump out. Absolutely beautiful. Thought you were going to have to move it to trouble, but it just blasted right through. Guys, this is 4 for 4. The exact same look, the exact same trade, the exact same conditions, the exact same entry, the exact same exit. 4 for 4. Nicely done, Ron C. Thank you for posting that. Momentum and a clear path. Hey, have a good one. Enjoy your chili dog. Enjoy the beach. I hope the hurricane doesn't mess with you guys. Wayne. Everything says up. You wait for it to get past the fib. As long as it's screaming up, you love it. And notice that it doesn't change direction until it gets below the small triggers. Pretty cool, right? Waited for it to get above. Every chart says up, and you know that as long as it's cranking, it's not coming down. I will, Ron. I will definitely pass that along. Thank you. He's kind of out of pocket today, getting stuff done. So Steve, Diego, and Josh had to go to work. Do you guys see it again here, though? He gets in because of momentum. Notice that his small chart says, hold it, Wayne. Hold it. Don't get out. You got it. You're good. Make some money. I love that. I love that. That's using the large chart for the why I got in. That's using the small chart to tell me when it's time to get out. Really well done. All right, Jen. Everything is up. You wait for the back of the bar to clear. You get in, right? You had trouble, potentially. Get out with the close on the wrong side. That's okay. You're killing it. And then when it comes back, you waited for the reversal bar. Why did you wait for the reversal bar on that one? Was it because the mid band was below the triggers? You were a little late on the first one. Yes, perfect. And then Jerry, this is kind of a good one, right? Because it shows just that other option. And when the large chart's so great, it's pretty easy to make money. So Wayne, you do 36 ticks, right? Use market flow for exit after getting paid at 36. What if something changes before 36? Do you just say F it? Come get me. I'll take the loss. I mean, not that you would swear, but I'm not really opposed to it. And Jerry, your read was perfect. We're just trying to give you other options there. But this is one of those ones where I love it when you guys tell me, well, my stop's at 12 ticks. Is that where the market shouldn't go? Well, my target's 36 ticks. But what if something changes before 36 ticks? Right? What if something changes before her goal? She gets out. She knows. She'll find another trade. She's been in my class. She knows how to find the best trades. And there's a lot of them. You guys are proving that today. There's a lot of opportunity. Every trade doesn't have to be a home run. Base hits pay bills. I think Ron has Exhibit A 4 times in a row. And if my math's right, well over $1,000 on the day. With a target that was never bigger than $115. I don't know. Some old dude likes chili dogs and bikinis. So he's friends. I'll be his friend. Those are my prerequisites, guys. If you want to be my friend, you have to like chili dogs and bikinis. Good stuff. Let's go to the live market. Split triggers. If you took the reversal bar, guys, this one didn't work, but you took a smaller loss. Now we're into resistance. Let's hold tight. Isn't that crazy, though? No momentum. No momentum. Areas on the wrong side. Pardon my French. I'm swearing too much today. I apologize. Yeah, I do like those, though. I want you guys to see how easy life can be. So this is the large chart. And I'm going to put this over here, too. And we'll stretch it a little bit so it looks. Guys, I'm giving you the keys to the kingdom right now. I'm showing you exactly how I think every time I look for a trade. And this is where we're looking. All right. In this picture, do I have odds favorable momentum? Do I have strong trigger lines? Guys, help me out with this. I'm on a bunch of allergy medicine and I'm just not sure. Hey, Jerry, take care. I appreciate you being here. I always do. Guys, did I have odds favorable momentum right here? Anybody? Triple dog dare you to answer. No. I'm going to cover up that advantage, Morgan. Did I have a clear path? Did the small and the large break through resistance? What do you guys think? No. So this is where you're going to get to. Why would I take a trade missing 66% of my needed advantages? I think everybody should print this out and put it on their desktop and learn to talk to yourself. I don't have momentum. I don't have a clear path. This is what we call an avoidable loser. This is money that you shouldn't give away. This is the difference between successful traders and traders that struggle. This is the one that you never want to miss. This is the one that you have to be okay missing. Does that make sense? 90% of your day is doing nothing. And I want you to see. Some of you said, I know I don't have momentum and I know I don't have a clear path, but Mark, it gave me a reversal bar. So that's a trade, right? No, that's hoping this stuff just goes up anyway. And I hope you had it in you to manage out before you took the loss. You probably didn't. You probably gave a little up. So every time I look at the market, do I have odds favorable momentum? Yes, I do. Do I have a clear path? No, I don't. But do I have an entry area? There's a mid band right at the top. And if I'm willing to take this 50-50 trade, I don't want divergence. I want strong triggers. I want the least amount of risk because I know exactly where my stop has to be in the event that I get a trade. Does that make sense, you guys? I talk through it every time. What am I up against? What's my challenge? My challenge is the path isn't clear. What does that mean? That means that if divergence is true, this might not be my trade. Because my triggers are split, maybe I'm willing to take it if I get a reversal bar off of support. If I get a reversal bar off of the midband. So I put a buy stop in. And I say this market absolutely, positively, without question, has to give me a reversal bar or I refuse to take this trade because my entry isn't perfect, because my path is not clear. Let's see what happens. Let's see if it gives us the reversal bar. I know that price can return anywhere inside of these triggers. I know that price is most likely to bounce at one of these areas, which means that since I'm at the area, since I'm in the range where price is expected to return, if I choose to take this trade, I'm going to force it to go in the direction of the trade. Does it guarantee a winner? Heck no. But what's it going to do, guys? It's going to take where my stop needs to be down here and put it all the way up here. You guys following me? And then where's my first trouble spot? This divergence high. Man, it just keeps going down. We're getting close to the point to where I'm not willing to accept a reversal bar. My first trouble spot is 12 ticks in the distance. Well, my stop is 2 ticks below. There's my $100 before my first trouble. And this is where understanding, guys, if a second divergence will take me out of this trade, I can actually put my stop 2 ticks below this reversal bar marker. That's when I'll know if it's true. I waited for confirmation. I have all of the momentum. I'm taking quick profits at $100. And again, if divergence takes me out, 2 ticks below the reversal bar marker, So at this point, I've got 6 ticks of risk on the trade. It's not an arbitrary stop placement, Morgan. This says if divergence prints, that's an exit condition. So right now, I've got nothing to do. Either divergence is going to print and it's going to take me out. That's cool. Small loss. Who cares? Or it's got to go to my first target. Divergence hasn't printed yet. If it does, there we go. I'm out with the second lower divergence, guys. $50, $60 loss. But did you notice how I didn't say I hope, I wish, I want, it could, it might? I kept it very pragmatic. And now it's going to mess with me. But my rules say 2 divergences on a 50-50 is a deal breaker. That's my trading plan. Did that make sense, everybody? Your small chart didn't print. Which higher divergence are you talking about? The one at the top? Up here? Right on. Well, then you might have stayed in this one. The KISS plan says don't take a 50-50 with divergence. I use the confirmation just to show you guys that if you're going to take it, it's okay to force it. And then mine says a second lower. So Kurt, we're different. Mine says that's an exit condition. What if I get a third divergence in the same price range? Not every trade's a winner, guys. Not every trade's going to go the distance. But understanding what it takes to get you in, understanding what it takes to get you out. Nope, because Morgan, once you get a reversal bar, doesn't your stop go 2 ticks below it? Is that a part of your plan? Aha. And this one might go, guys. And I might have taken a small loser. I don't care about 50 bucks, whatever that is, 60 bucks. It's okay. That's why we talk every day, man. That's why we do this every day. But I'm waiting for my next trade. That one didn't work out for me. It might go. That one didn't work out for me. I'm cool with that. I followed my plan. And this is one of the things about simulator, guys, is you might say, oh no, it's going without me and I'm just going to jump in real quick because I'm so worried about it. And then you're like, hold it, I'm breaking my rules. This is scary. I better put one of my targets right here. And man, I can't risk that much. Let me make sure that I put my risk right here. And that way, man, I'm guaranteed to get paid if it goes up and I'm not going to lose a lot. And guys, what is this nonsense? I see it all the time. Oh no, it stopped me out. Now I'm an emotional wreck. I took a loser because the rules were met. And now I just took a loser because fear forced me to put my stop someplace where it shouldn't have gone. Anyone other than me ever done that? And guys, I say anyone other than me a lot in this room because every mistake that I talk you guys through, I've made 1,000 times. Everything that I teach you guys, every word that comes out of my mouth comes from my own losses, my own mistakes, and in some cases, my own failures to adhere to a plan. And one of my goals is to keep you from making the mistakes that I made. Or at least teach you how to avoid them. So guys, we got about 20 minutes, and there it goes. But now we're reset, right? Now it's odds favorable. Now it's a clear path. Now it's a mid-band inside of triggers. Now this is the good one. That's the one I want. That's the higher probability. I'll put it 2 ticks above. And now I just hope the small crowd gets there. Come on, small crowd. Where does my stop go? If I get filled, my stop is about right there. I already know where my risk is. I'm in. My stop's right where it belongs. My targets are right where they need to be. So my first stop movement, if I get a reversal bar, then I will move my stop, whoops, 2 ticks below that reversal bar. Are you guys with me? If I get a reversal bar, then I will move my stop 2 ticks below the reversal bar, which means I can kind of get ready if it happens. My first target's at $100. My second target is at $200. And right now, all I'm hoping is that momentum pushes me up, that momentum carries that trade, that momentum gets me to that reversal bar marker and ultimately my first target. But every indicator on every chart says up, and we are bouncing off the area inside of favorable large triggers. There's nothing else I can do, guys. There's nothing else to do right now. Give me that reversal bar. Come on. And right now, my stop is in its original spot. I clicked on it once so that I can be ready if I get that reversal bar. But if I don't get the reversal bar, guys, it's going to go right through where I have it, and it's going to go down to the other stop because this is not the right spot. Price may return to the bottom of those triggers. Oh, getting close. Getting close. Come on, buyers. You can do it. Boom. Now I've got less risk. 34 is the target. Nothing to do. It either hits 34 or it stops me out for a tiny little loser. 5 ticks, guys. Oops, 6 ticks. That goes there. If it comes to the mid band, then I'm in the trade. If I get a reversal bar, then I adjust my stop. If it hits my first target, I'll go break even. If it stops me out, heck, I don't know. I might take a re-entry because I've got odds favorable and a clear path. And you guys remember when I said you'll create a plan that suits your needs based on your ability reading the indicators? You might not put your stop inside of those triggers. Whoop, first target hit, we're break even. It's either second target or break even, guys. How are we feeling about it? Does this make sense to everybody? Does it have to be difficult? Can you guys do this? Right now, that little devil's going, Mark, take profits, take profits. What if it comes back? Guys, I'm on the good side of everything. Everything says up. I got room, tons of room to that next fib. And I've got $100 in the bank. I have already made up for my loss over here. I love this stuff. I love having a plan. Does anyone notice that my stop is right at a mid-band inside of favorable large triggers? That sure seems silly. But the KISS plan says that's where it's at until I can formulate my own plan. Directly into a termination condition, and it sure didn't work. Directly into a termination condition, and I'll be damned, it didn't work. Jonathan, gotta respect those lines, brother. Gotta respect those termination conditions. You knew about them, right? You knew they were there. Why trade into them? Why? Pow, to the tick. Boom, to the tick. Guys, these things are gold. You don't have to hope. Oh, look. I thought it was going to come get me. I was going to jump ship because I was caught up on the small chart fluctuations. What does my large chart say, guys? What direction is that going? It's going up. Do I have momentum? Hell yeah. Is there anything in my way? Not a thing. Psh, I'm walking out of the room to get my drink. I left it in the other room. I'll be right back, guys. All right, I'm coming back from the kitchen. What happened? Oh, I'm still in the trade. I'm so glad I didn't touch anything. I'm also glad my kitchen's so close to my office. I needed a drink. It's not a job if you love what you do, Jen. Not a job if you love what you do. But the large chart still says up, right? And the large chart still has a clear path. And my large and synthetic are up. Uh-oh. Oh, no. Oh, no. Divergence pushed it right back to a midband inside of favorable large triggers. What a great place for a bounce with all that momentum and a clear path. My rule said don't exit, Pete. I don't have an exit condition yet. I can't lose. I can't lose. I've already been paid. I've got no risk. And I still have a high probability trend trade here. How cool is that? Right off of that midband to the freaking tick. Took one earlier for 340. Very nice. I love it. Lower than what, Kurt? Lower than what? I've got one divergence on a high probability trend trade. No, hell no. How many divergences does it take to scare me out of a high probability trend trade, Kurt? How many do I need to see before I start to pucker? No, you're okay. Keep asking these questions. Because your brain's going to tell you to get the hell out of this trade, right? Your brain's going to tell you, there's divergence. And you're going to have to remember, oh yeah, Mark drives it home every day. It takes 3 when I have odds favorable and a clear path. And anything less than 3 is right out. Tree. I see what you did there, Morgan. Nicely done. So Jonathan, you're saying that you took a trend trade from the area inside of favorable large triggers when you had odds favorable, minimum, and a clear path. So Jonathan, your stop's down here, right? And you're waiting for a reversal bar. And if you get a reversal bar, then you'll move your stop. You guys see that? It's just a trend trade. So let's see if we get a reversal bar. I sound Darlica? I don't know what that means. Is that an Australian word? Darlica. Darlica? Darlic? I don't know that word. And I'm good with words. Doctor Who. Oh, I'm not a nerd. There's the difference. My wife probably would have gotten that one. Does it, Kurt? Why? So when you start going crazy because it takes a second, Kurt, what does your large chart say? Up or down? What's the momentum? Up or down? Is the path clear to the upside? So who gives 2 shits what happens here, man? Let's go up, brother. Let's go up. Let's let the large chart lead the way. Why is it taking so long? Because the buyers and sellers are trying to figure it out. You don't know who's going to win. But you can look at your chart and say that the buyers are clearly in control, right? And who are we trading with? We're trading with the large crowd. We're trading with the cool kids. We're trading with those bad men and women that have the potential to make things happen. And right now they're telling you without question they want this thing to go up. But there's the small crowd with the rich uncle. They tried it once right there. Midband stopped them. They just tried it again, and they couldn't get a tick past that midband. That's why the midband is one of the areas that we'll trade from. I'm not touching this trade, but I'm going to use Jonathan's stop. So Jonathan says, will you please, for the love of fuzzy, get up to 36 so I can reduce risk? I don't feel like that's asking too much. Just a couple ticks, get up there. Other side of the small triggers. Hey, small chart. Did you notice all the momentum over here? Let's do that. Let's do that. Let's go. Get your poop in a group. Everything says up. And here's the thing, guys. I'm never guaranteed a winner. Never guaranteed a winner. But I sure do like my advantages. You might take your 100? All right. Do me a favor. Take your 100, Jonathan, so it can go ahead and go to the fib for me. If Jonathan's getting out at 100, I'm holding for the fib. Just to piss him off. And watch, now it'll just crater down. Follow your plans, guys. Follow your plans. If I were just taking my first trade, I'm break even. But we're going to have some fun and see what happens here, right? We're going to have some fun. It's crazy, isn't it though, Kurt? Watching it go up, down, over and over. Watch this. If you right-click on your chart trader and hit properties, get that off of there so you don't stare at it. Uh-oh. Now we're getting to the bottom of the range here. Now we're getting to the bottom of the range. Oh, man. They're going to get my stop. Oh, they're going to get my stop. I know they're going to get my stop. Oh, son of a gun. Guys, I got to end class early and call my wife. If you took the first trade, you made money, you were out break even. If you tried to take the second shot, and look at that. Do we take it with a reversal bar? Because everything still says up? I don't know. Maybe we should have. Maybe we shouldn't have. That was the wrong side. But all of my triggers are above support. My smalls are still above the large. You would have jumped out? I don't jump out. I don't believe in jumping out. I know exactly why I'll enter a trade. I know exactly why I'll exit a trade. And guys, I'm telling you right now, if you took the correct entry, you made money. If you took the correct entry, you made money. If you missed the correct entry, you might have just taken a hickey. So this is where trust comes in, guys. This is where you have to know your plan. Think about it, and let me show you something. Because I think about things in terms of what's happening behind the scenes, right? So let me take a picture, and let me know if this makes sense to you guys. Sometimes I say stuff that probably doesn't make any sense at all. The buyers were screaming, and everything set up, and momentum was good, and life was good, and everybody was just trying to get it to go up. And the first push against all of that momentum happened right here. Right? This is the first time that the sellers tried to fight. And it goes up again and we get paid. And this is the second time that the sellers try to fight. And look, they pushed it a little lower, didn't they? And now they're trying to see. And this is the fight, guys. Get in on the best seat for the fight. Get in on the first shot of the buyers trying to push it up. It's more likely to go up. The more they fight, the less likely it is to go up, guys. The longer it takes your trade to go, the less likely it is to go. So some of you are like, oh, well, I'll just get in way over here because XYZ. And just, man, take the best entry. Commit to it. You'll be glad that you did. And I'm going to end YouTube real quick.